Well, good morning, everyone. My name is Aline Shuramoff, and I'm the Senior Vice President for Community Development and Engagement at the Minneapolis Fed. And if you've ever been to a Fed event, you know that when Fed people are speaking at events like this one, we're expressing our own views and not necessarily the views of the Federal Reserve Bank of Minneapolis or the Federal Reserve System. I've been at the Minneapolis Fed for about 6 years now, and when I joined, I came from municipal government in the Twin Cities, where when we say community development, it means something a little bit different at the Fed than it does in municipal government. I'm sure many of you have wondered that. So my colleagues Ben and Libby will be able to explain a little bit more about the Fed and our community development function over the lunch hour. But I think most of you are probably aware that the Federal Reserve has a dual mandate provided to us by Congress, right? And that is to pursue maximum employment and stable prices. And those are the tools given to us by Congress. Shelter inflation, for those of you who don't spend a lot of time in the inflation indicators, is the single largest component of CPI, the Consumer Price Index, and that's really a key measure of inflation. So from an economic standpoint, it makes sense that the Minneapolis Fed is really interested and concerned about the way that housing affordability might be changing within our district. But that's really only one reason that we're interested in housing. We're also charged with understanding the economies of all of our regions. We do outreach trips like today's across the 6 states in our district, in the Fed's 9th district, from Montana to the Upper Peninsula of Michigan. So it's Montana, North Dakota, South Dakota, Minnesota, part of North Wisconsin and the Upper Peninsula of Michigan, to better understand the opportunities and challenges across these geographies. Housing and housing affordability, and the affordability of housing is the topic that I hear everywhere I go in our district. And in several trips the team has taken to Fargo, Grand Forks, and Bismarck over the last couple of years. So when I joined community development at the Minneapolis Fed, I decided our team should really try to focus on housing. It was so important from not only a market standpoint and deepening our understanding of markets and affordability across our region, but it's something that people are obviously keenly interested in. It's in these conversations that we're talking about, not only from a market perspective, but it's really also a personal one. If you want your community to thrive, if you want your community to be a place where people can grow old, where your children can live nearby, where businesses can open and expand, at some point you need to think about where everyone's going to live. In other words, we need to think about something that people often talk about: where do jobs go to sleep at night? We hope our conversation today helps people think about not just housing conditions today, but about how today's housing has been influenced by construction and population trends of the past. We also hope that today's event helps people think about tomorrow's housing and how tomorrow's housing market might look differently. We've brought in speakers from around the country and the state with a wide range of perspectives and expertise on different aspects of the housing market, from how housing production is regulated to how it's financed, to how tenants and home buyers themselves experience the housing market. But the expertise that we have today won't just be folks who are on stage. Even just in the few minutes we had the opportunity to network a little bit, we know that there are a lot of experts in this room, and we're hoping the people in the room can make new connections, reconnect with other folks. It's nice to be in person, some of us were talking about. So to that end, please take note of the QR codes. You all have agendas on your tables. We'll be using Pigeonhole, which is an app to take questions during the speakers themselves. And for folks online, welcome to you folks as well. Thank you for joining us. Restrooms to the left, and there will be a conference survey at the end of today's event that we're excited to have you guys fill out and give us some feedback. It's been a while since we've done a regional housing conference or a regional housing event like today's, so please give us feedback. Does it make sense? Do the topics make sense? And one of the things that I was sharing with somebody else earlier is, when we go out into the district, we hear from folks about concerns, challenges that you have in various aspects of your market and the areas of your expertise. That's often how we build our research portfolio. We hear anecdotes from people Like, for example, in the Twin Cities, we were hearing from multifamily operators that they were kind of facing an existential threat or existential challenges to their operations, and we thought it would be interesting to kind of do a deep dive and have a better understanding of how both not-for-profit and for-profit multifamily operators were operating. What were some of those challenges? We're able to write a number of articles around the cost of insurance, the cost of security, the cost of maintenance, finding folks to be able to provide maintenance, things like that, giving us the opportunity to do a little bit of a deep dive. But really, that whole series of work was generated from a couple of conversations that we had with folks who were really sharing what their experiences are. So connections and the opportunity to connect with folks like you today are really great and kind of precious opportunity for us. So with that, I will turn it over to Libby Starling, who's going to facilitate our first panel. Thank you.
Thank you, Aline. It is my honor and privilege to welcome our first panel to the podium today. And let me give you just a little bit of background on what we're hoping from the first panel. Aline gave you some introductory words about the Minneapolis Fed and a little bit about our community development function. There will be more coming over lunch. But inside of that, one of the things that we do well is bringing resources from different places to inform local conversations. So that is the thinking behind the panel that is now to my right, of trying to provide some ideas from different parts of the country to see, for all of you to see what feels right, what doesn't feel right, and to inform this afternoon's conversation, which will be people from North Dakota who are working and living in North Dakota. So let me give you some words of introduction for all of our panel. First, we have Emily Hamilton. Emily is a senior research fellow for the Mercatus Center at George Mason University, where her research focuses on urban economics and land use policy, and where her work often highlights state-level approaches that support housing production and affordability. In addition to her academic and writing work, Emily also served as a member of the Montana Governor's Housing Task Force that supported regulatory reform in that state. So Emily will be kicking off the panel with that high-level point of view from across the country. Next, we have two people who will be focusing more on kind of the state and regional level, starting with Nate Dorr. Nate is coming to us from the Greater Minnesota Housing Fund, where he is the Capacity Building Program Manager. The Greater Minnesota Housing Fund is a community development financial institution that advances affordable housing across the state of Minnesota. In Nate's role, he works with housing developers and communities to implement a wide variety of strategies to improve housing options in rural and tribal communities. Third on our panel is John Turner. John is the Community Collaboration Manager for the Nebraska Investment Finance Agency, which is the state housing finance agency for the state of Nebraska. John coordinates NYFA's efforts with housing providers and other public agencies. And we invited John because we had heard in a different venue about some of NYFA's approaches that we think could be of interest in North Dakota, highlighting some of the similarities between those states. And then our final presenter is Norm Van Eden Petersman, who is with Strong Towns, which is a nonprofit advocacy organization that supports cities and towns as they establish patterns of development that are financially resilient. Norm is actually coming to us from British Columbia, so giving us a little bit of the international perspective today as well. So each of our presenters will have about 10 minutes to go through some slides and give you an overview of some of the perspectives. I'll be coming back with some moderated questions, and then we'll move to questions from the audience through the Pigeonhole app. So with that, welcome Emily.
Good morning. Thanks, Libby, and thank you all for being here this morning. As Libby said, I spend part of my work time on research, mostly studying the effects of zoning and other types of land use and building regulations on housing market outcomes. And the other half of my time I spend working with state policymakers, primarily looking at opportunities to open up areas to lower cost and a greater supply of housing, and then analyzing the effects of some of those policies that have been implemented. I know some of you already know a lot about zoning and land use regulations, but I'll start off with just a very high-level overview of what these rules are and how they affect opportunities for people to live where they want to at prices they can afford. In most of the country, most land where housing is allowed is limited to just detached single-family zoning with minimum lot size requirements. So this is the most expensive type of housing, and in places where land is expensive, just that yard to purchase for the right to build a house can be a very high floor. I think there's been a lot of emphasis in the zoning reform conversation on the single family piece of this and not as much on the lot size. But I would say these are just equally as important. Together, they are saying how much land costs have to go into each unit of housing. And they have indirect effects as well. When a piece of land to build a house is really expensive, home builders find that they can't build starter homes because they can only sell a big fancy house on a big expensive piece of land. For most of the 20th century, the problems caused by zoning and insufficient housing supply were limited to really specific parts of the country, mostly those coastal metros that are at the top of people's mind when we talk about housing affordability. But in the 21st century, and especially since COVID, this is a problem that is affecting almost every part of the country and people at more and more income levels. We're seeing a higher percentage of renters being severely rent burdened, and the age of first-time home ownership is climbing across the country. And what's the role that state policymakers have in this issue that's primarily driven by local land use regulations? Localities get their authority to regulate land use from their states. And so state policymakers have a role to play in setting some guardrails on that authority, especially when local land use restrictions are causing statewide affordability problems. And we're seeing more and more state policymakers experimenting with some limits on local zoning authority with the goal of opening up opportunities to build more and less expensive types of housing as the problems of insufficient housing and high prices of housing are affecting more and more of their constituents. This map shows a few areas where state policymakers are experimenting with different types of rules that can open up new opportunities to build less expensive types of housing. I'll talk in detail about accessory dwelling units, which has been the area where we've seen the most statewide experimentation. Other areas are legalizing multifamily construction in commercial zones, experimenting with building code reforms, especially with the intent of making it possible to build multifamily housing for less and on smaller pieces of land, limiting parking requirements, and protecting property owners from downzoning. You can see that some states have implemented rules in all of these categories. North Dakota hasn't yet, but Montana has done a lot, as Libby mentioned, in part due to the work of Governor Gianforte's housing task force. And I'll focus on two areas of potential land use reform that I think make a lot of sense for North Dakota and any type of state that has a lot of people living in rural or small town jurisdictions. And the first I'll go into some detail on is legalizing accessory dwelling units. As I said, this is the area where we've seen the most state level policy experimentation. 18 states have broadly legalized accessory dwelling units for homeowners across their states. And I think the reason that we've seen ADUs being a popular level of state land use policy is because they can work in so many different types of places and jurisdictions. They can make great sense in a very urban neighborhood. They can be an option for new housing supply in the most rural part of the country, and they can take lots of different forms. So here's one example that's a backyard cottage, but these could also be built in a basement or a converted garage. They're just a very flexible type of housing. And really the only reason that we have a term for accessory dwelling units, like a very technocratic sounding term, is because single family zoning that covers so many of the neighborhoods where Americans live is so restrictive. Historically, an ADU would just be a very normal way for a person to use the house that they own. But increasingly rigid zoning rules adopted over the past 100 years have cut out this option. As I said, 18 states have legalized ADUs across most of their homeowner populations, but I would say that only 10 of those state laws are what I would call a strong ADU law. Those are the darker states here, and the teal states have what I would call weak ADU laws. And this highlights an important issue in all types of zoning reform, whether we're talking about the local or state level, is the details of the reform are really important. And I think this is easy to see with ADUs in particular because they're a simple type of project. This table breaks down some of the ways that these statewide ADU laws vary and how these details matter. If you have 10 different types of regulations that are standing in the way of a homeowner building an ADU, just saying ADUs are now allowed is not necessarily going to make it possible for homeowners to actually build them. Some of the rules that can stand in the way of homeowners finding it feasible to build ADUs are owner occupancy requirements that say that in order to rent out their ADU, the homeowner has to live on site. This means that it's more difficult to finance ADUs, and a lot of homeowners who might be interested in building one of these units don't want to go to the extra step of putting a deed restriction on their property that's going to limit who might want to buy it in the future or how they might be able to use it down the line. Another very common barrier to building ADUs is parking requirements, where we can imagine just that many single-family houses don't have a natural place to put additional parking, especially if part of that land is also going to be used for the ADU. A lot of localities say they allow ADUs, but they go through a public hearing process to get the permit. And that can be off-putting to a lot of homeowners who are reasonably intimidated by asking permission at what might be a contentious meeting for the chance to build an ADU. And it can also require them to go to an expense of getting drawings, for example, for an ADU that they may or may not get a permit to build. And then the last factor of what I would say makes up a strong ADU law is specifying that both attached and detached ADUs may be built, because only one or the other is going to make sense in a lot of cases. And ADUs certainly are not the solution to our housing policy challenges, but they can be one important piece. In California, for example, we've seen that getting rid of some of these barriers to ADU construction has led to a big increase, where today ADUs are making up a large percentage of the new housing that's coming online in California. The other policy that has not seen much statewide policy experimentation, but that I want to highlight for North Dakota is allowing manufactured housing in more places. As Libby mentioned, I worked on the Governor's Housing Task Force in Montana and was able to learn a lot from that experience about what makes manufactured housing an attractive option and feasible for developers to use. And I think we were able to make some statewide changes there that are going to make it a more attractive option. And that's important, especially for rural communities, because manufactured housing is about 30% less expensive than a site-built housing unit of the same size and quality. And it also means that housing can be moved from the place where the workforce is available to build it to the place where the housing is needed. But as with ADUs, the details really matter. Some of the factors that might make manufactured housing infeasible to use, even if it's allowed on paper, are aesthetic requirements that might make typical factory-built housing infeasible, very high land costs where minimum lot size plays a big role in making it unreasonable to use, and creating new opportunities for manufactured housing parks. So those are two areas that I think make a lot of sense for North Dakota to consider. But I certainly don't want to suggest that that's the only type of housing that makes sense in states with large rural populations. Both Fargo and Bismarck have beautiful examples of infill construction in their downtowns. And so I'm happy to talk about all types of housing reform that are on the table in the panel. Thanks so much.
Nice, Emily. All right. Good morning. My name's Nate Dorr. I'm with Greater Minnesota Housing Fund, and I do rural and tribal housing capacity building across the state. And thank you for having us come speak today, or me. And so, Greater Minnesota Housing Fund, like Libby said, is a CDFI, Community Development Financial Institution. We get the nonprofit status. We use that to access U.S. Treasury dollars at a lower cost for capital, and we can invest that in affordable housing. And so our priority areas are really the preservation of existing affordable housing, successful home ownership, new affordable housing, and to all that to work to end homelessness. And I work in capacity building across the state, and I've been in the role for about a year and a half. It's really a community development type of position, and heavy on travel and liaison work and relationships and connecting folks. And so a lot of the challenges I see when I kind of get these calls, and I consider them triaging. So we try to figure out what the issue is in the community and then how to connect or how to use our resources. And a lot of challenges with small city staff don't often have the expertise. So you might have a community of 600 people with a city clerk and a council and planning commission or EDA, but they're not always experts in housing. And so we provide some assistance there. Communities are trying to figure out if they should put in infrastructure to develop, to incentivize developers to come to their community, and trying to figure out some of that dynamic. And sometimes developers want to have control over where the infrastructure goes to fit the units that work best for them. And of course, infill lots maybe less expensive on infrastructure. And in rural areas, we generally see a shortage of developers and construction firms. So maybe there's a need and maybe some financing's there, but it's harder to find those that are actually going to put up the housing and take the risk to develop that property. Across rural Minnesota, probably here too, is a desire for home ownership, and that's thinking of wealth creation. You're earning equity in the home as you're paying the mortgage. And so their desire for home ownership, when I go to city councils, we kind of ask, what's your vision for housing on this property? And they say they want market rate home ownership stuff. And that's a moment for us to do some advocacy and talk about who can afford that in your community. And so we do talk about affordability, because it is a challenge to build a new home on a single family lot for less than 360,000. It's upwards of 450,000 in many cases. And so if you're looking for first time home buyers, it's really a challenge to do that. This slide is from Minnesota Housing Partnership. They do county profiles for each county. I'm from the Bemidji area, so this is Beltrami County. I just want to point out this without spending a whole lot of time on here, but the top line is the salary needed to afford a median priced home in that community. The next bar down is the salary needed to afford a 2-bedroom apartment. I think those are median rents, related to median rents in the area. And then what we have is occupations most in demand in the county. And so registered nurses earn a little bit more, electricians might be in a similar range there, but kind of start seeing the missing middle and the gap there and below that blue line of nursing assistants, retail sales people, home health aides, fast food workers. And so when we talk about advocacy, these are people already living in your community. So some of the opportunities we talk through with those communities is that looking at demographic trends, there's an increase in single family households. And so the size of units may need to scale to meet the demand. So maybe that's a 1 and 2 bedroom units. Rural municipalities, counties, cities are really challenged on their tax base. In Beltrami County, we have a lot of public lands, and so we're limited there too. But the idea is to increase the tax base rather than increase the rate on current payers. So if there's infill lots, if it's tax forfeited, if it's excess land that a healthcare institution or education institution or faith-based community might have, those can be assets into a deal, so land donations and things like that. Emily talked a great deal about land use and zoning. We spend a lot of time in land use and zoning and helping communities figure out what can fit on the lots they have available. So I'll talk a bit about how we help there. And then again, increasing density and tax base to reduce development costs. We're seeing that on a per acre basis, the tax revenue generated from housing is greater than industrial commercial in a lot of cases. As a whole, you might have industry and commercial properties that end up paying more total, but on a per acre basis, residential gets us more tax revenue. And so what is capacity building? I kind of think of capacity building as different phases of knowing and doing things. So it could be awareness. So you might be aware of a state housing tax credit once somebody's talked about state housing tax credit and you didn't know about it before. Then there's training. So maybe you've had training on, I'm just going to use state housing tax credit as an example. You've had training on how state housing tax credits work to get a housing thing passed. And then without the practice, you kind of lose the knowledge. So from awareness to training to practice and then proficiency, these are all the tools we implement to try and get communities to proficiency and better practice. So our program, we're able to offer more time to do the work. We bring in expertise and consultants that essentially more staff time into the project for smaller communities. The talent to get it done, so we have expertise on staff and through contracting. And then the tools to do the work, I can get a bit into that in the next slide. And the treasure is just time, talent, tools, and treasure is just an easy way to distill it a little bit. And I'm an outdoorsy person, so I like to think about this work as being a trail guide. So if somebody wants to go hike in the Bitterroot Mountains or somewhere, I've been there, so I have some experience, but if it's their first time, I'm not going to do the hike for them, but I can give them a map, some things to pack. So the planning and guidance and referrals, like on trail, we would do that with housing. So it's maybe cliche, but it's pretty true that this housing development's a journey. It does take sometimes 3 to 5 years to get housing done. The talent here is having that experience, guiding through land use, financing packages, setting up housing trust funds and referrals. The tools are pretty unique here. Of course, on trail you have gear, equipment, a compass, maps, maybe some bug spray. And on housing, how many people use OnX for hunting? OnX is an app on your phone. I like using that a lot for my work too. And so it's an app you pay. I think for me it's like $35 for the state of Minnesota. I can zoom in on a community, see who owns what parcel, get their contact info, how big the acreage is, and that sort of thing. Essentially use that for finding excess land and making referrals. Kind of jumping around here, but tools like tax increment financing or tax abatement, low-income housing tax credits, those are all tools we can use. I'd also say narrative and advocacy tools are important in our work when we talk with councils that, so just talking about affordability pieces essentially. And then treasure, of course, for me, a cooler full of cold beverages would be sweet to find on trail. But in housing, again, maybe land donations or grants, loans, PRIs or program-related investments, money that essentially gets paid back to the investor, trust funds, developer equity, philanthropy. So that's how I kind of see this work in capacity building as it fits in housing. And this will be my last slide. I'll skip the remaining ones and have John come up here. But essentially, my program, we have technical assistance that's either on staff expertise or contracted expertise. We've hired people to work through complicated housing tax credit projects and whatever it is. And then strengthening local collaborations. I do some partner coordination with Lower Sioux Indian community where there's lots of capacity building providers in the space, but we're trying to organize so we're not stepping on each other's toes or confusing the message. And then resource identification. So, John, if you want to come up, I'm going to skip through my slides and I'll get on to yours. All right, thanks.
Good morning. Again, I'm John Turner with the Nebraska Investment Finance Authority. Shout out to my partner, North Dakota Housing Finance Agency. These great partners to have, a lot of innovation and ideas and collaboration. Okay, so today we're talking about workforce and modular housing, and Emily and Nate did a great job of kind of leading up to where I'm going. We always like to start our slides with our mission statement, which is growing Nebraska communities through affordable housing and agribusiness. And there you see our vision and values. I think this was already touched on, but it used to be that housing was not considered to be part of economic development. But in current times, we know that it is. Childcare and housing are necessary building blocks that support workers. And without workers, there cannot be economic development of any scale in rural America. So, what we're looking at is reframing housing as economic development. Employers cannot expand or relocate to communities where there are no houses for those employees to live in. In rural areas, schools are at risk of losing teachers who are forced to live in nearby towns. Hospitals are challenged to find not only people to fill nursing and health aid jobs, but even CEO positions. When no available, acceptable, or affordable housing can be found, existing employers cannot expand operations, and new employers will not consider relocation or expansion to places with inadequate housing. We actually had a black shirt feeders move to Hagler, Nebraska, which is the world's most economically friendly meatpacking cattle industry, and all of the employees live in Ray, Colorado, because there isn't housing for them in Hagler. It's a very small town. So here's some quick facts about Nebraska. There are population, number of households, a lot of data, and really we have the same challenge as many rural plain states. In an effort to address the housing challenges that impact our growth, the Department of Economic Development and NIFA commissioned a housing needs assessment in 2022, and that was updated in 2025 as the basis for constructing a strategic housing framework with shared goals, tactics, and work groups that we call pillars. So when creating that framework, that needs assessment, it was determined that the communities facing like challenges would most likely be aligned in finding solutions that worked for them, knowing there's no one-size-fits-all housing solution, and that challenges are also somewhat particular our assessment focused on communities of like size with similar distances from larger metro areas. The USDA's Rural Urban Continuum Codes, or RUCs, were the right tool for this categorization versus a geographic East, Central, West assessment. So you can kind of see on there where the RUCs are, 2 through 6 or more closer to the metro, and then 7, 8, and 9 more rural. So since 2000, the total number of housing units has increased by 132,000 across the state, largely supported by RUCs 2, 3, 4, 5, and 6. While all RUCs saw an increase in the number of housing units since 2020, the number of total units for RUCs 7, 8, and 9 have decreased by about 8.6 thousand units. Estimates gauge Nebraska's housing shortage between 100,000 and 120,000 units across the owner-occupied and renter-occupied markets. So I mentioned earlier the strategic framework. So our goals of that framework were to reduce housing cost burden households and to develop or rehab 35,000 housing units across the state. It was implemented in 2023, and 4 pillar groups, which you see here, were created to make sure that this wasn't just another plan that would gather dust on a shelf. Pillar groups have met monthly since then, and the council has met 3 to 4 times a year in person to adapt, evolve, and monitor progress. You can see the entire framework on our website, but today I'm going to be focusing on Pillar 4, even though Pillar 3 is the one I chair I'm most passionate about. I can talk to you about that later. So Pillar 4 is really the focus of a workforce pipeline and manufactured housing, which we heard a little bit about from Emily. So the workforce pipeline is to develop a home building academy that supports and expands existing efforts to increase those being educated in the construction trades, to redevelop and fund education and training pathways throughout the state. And then manufactured is to incentivize the manufactured housing to support affordable and attainable housing in rural Nebraska to alleviate the workforce challenges, create incentives to ensure that more of the manufactured housing that's produced here stays here. So prior to the framework, we created a pilot called Teaching Nebraska Trades, and you see there the supply and demand side. What we worked with was community colleges so they could retain the trade instructors because we were seeing they were going off to become contractors. So we created a fund to help 3 community colleges, and then we wanted to support the Builders Foundation, which teaches the high school trades. So success stories of that program were 100% placement rate in construction trades from program graduates. 94% of students remain in the community. That's a story about Hastings. Actually, that's a house that the students built in Hastings, Nebraska. There's consistently a wait list. And then the Builders Foundation was awarded a grant through the Department of Labor just recently so they could expand across the state. Also in Nebraska is another effort called 6 Region 1 Nebraska, which is led by our governor, and there's a nice synergy happening between the framework and that. So we're looking at sustainable funding. When you talk to our director, she's trying to avoid one-and-done grant finding and looking at ways of investing in communities. And so one of those methods is to create we're calling it Teaching Nebraska Trades 2, which is loaning a school or a nonprofit entity up to $250,000 to build a home. And then they can sell that to a teacher or first responder, and then that money revolves into the next project, reducing principal needed. After 5 or 6 build cycles, the school will have self-sustaining funding, interest off the loan, continue to broaden the scope of programs, and really helping with that workforce pipeline. So coming soon, we have a modular ordering and delivery program we've been working on for the past couple of years. The goal is to facilitate bulk orders of modular housing to provide savings for participating communities using design standards and approved plans from multiple manufacturers, templated planned unit developments to increase density and simplify development, and looking at best practice and example plats. Leveraging community colleges, we're talking to them about installation. Can we train or have a certification in the colleges so they can learn about installing modular? So Allie Pointer did a case study for us, and I brought some copies of that if you're interested. I might not have enough for everyone, but close. And then we received a AARP grant of $15,000 to help create zoning and design standards. We did a request for information from manufacturers in September, and then we did an RFP to the manufacturers, and we've heard from 5 manufacturers that want to participate in this process. And so then we'll take that to the board in early 2026. And then by Q2 of 26, we're hoping to release the application and start working with those modular facilities. So that's what I have now, and I'll just wait for a Q&A later. Thank you very much.
Well, good morning. It's great to be with you today, and I'm going to see if this, there we go, perfect. I want to talk about how we normalize incremental development, and I'm here on behalf of Strong Towns. We're a member-supported nonprofit organization, as was mentioned, and a key part of our work is to release guidance and resources to help people, especially residents within existing communities, to be able to advocate for what is taking place in our communities, to be able to address our development patterns. So we have over 10,000 articles on our site that have been written in the last 15 years, including books in particular that I'll be drawing some inspiration from. The book Escaping the Housing Trap. So if you haven't come across it, I would definitely recommend checking it out in the context of how do we address the trap that we find ourselves in. So I won't go into all of the detail related to this, but I do want to touch on the fact that we need to normalize incremental development. We often call it small-scale development, but it doesn't stay small for that long, but it allows for the increments of development to begin to emerge within our places. Because as we can point out with evidence, with charts, with graphs, but also with that deep sense of connection to individuals in their own experience in their communities, the prevailing pattern of development that we see around us is making North American cities and towns weak and fragile. For instance, the city of Fargo relies on its annual revenue for up to 40% of its annual revenues comes from state and federal grants, including capital grants as well. There's a deep level of dependency on higher levels of government that are not necessarily always going to be at the table providing the support that is needed. We see, for example, in San Antonio, where they have enough roadway, if you were to whittle it down to single lane road, you would be able to drive from San Antonio to Las Vegas by way of New York City. That is a lot to keep up. They have enough sewer pipe to take you all the way to Memphis from San Antonio. And the challenge is that the pattern of development that has been in commonplace sort of standard practice ever since the end of the Second World War is not financially productive enough to be able to justify that level of public investment. And so the bills are coming due, the revolution is coming, and to top it all off, we've got great housing shortages. And so in the context of this, then we ask the question, well, to solve this housing crisis, what direction do housing prices need to go? Up. If you own your own home, if you're depending on your own home, if you need your own home to be part of your investment portfolio, if it's the way that you're going to fund your long-term retirement needs as well as end-of-life care, in that context, if you want to pass anything on to your children, you want it to go up. But there's a whole other chorus of people that are picking up pitchforks right now saying it's also got to go down. We've got to provide ways for that capacity to be established in our communities for me to be able to live honorably in a home that I can afford, whether I rent it or whether I purchase it. And ideally, moving many people through a pipeline that allows for that conversion from rental into home ownership over time. Providing a mix of suitable housing types for our communities. And in this way, one of the things that we are doing as a Strong Towns movement of now 6,500 members, but also thousands and thousands of people that are taking inspiration from Strong Towns, is to say we need to allow the next increment of development to be allowed by right in every neighborhood in America. And the graphs that Emily was showing, or the maps that Emily was showing, is evidence that that is not the case in the vast majority of our places. And it is going to be a deep, deep challenge for us. The province that I live in British Columbia, just a couple of years ago, it's going quickly, a year and a half ago, I believe, allowed up to 4 units on any residential property by right. And it has not meant a sudden, drastic, complete throw out everything and everything has been rebuilt. It's gradually allowing for incremental development to occur. But what they had to do was clear away all of the brush that was preventing people from doing this type of development in the first place. One of the challenges that we have is that our household sizes keep changing. The number of people per household has dropped significantly, and yet the average square footage of the new single-family home has increased drastically. And so the amount of square footage per person has grown significantly. And I ask the question, is that because there's an increased shelter need that we've gotten less good at living in small spaces? Or have we actually begun to corrupt or sort of distort our available housing supply by really leaning into the super good ways in which housing serves as a great investment? And then as a consequence, beginning to lock that in, much like a ratchet, where each time you begin to continue to bolster the status of housing as your investment, as your nest egg, then you begin to really lose sight of the need for shelter. And as a result, we see so many of the standards that we have smuggled into our neighborhoods and even into our downtown cores really reflecting the privileging of housing as investment status, which is understandable if we want to use that as the way that we fund our retirements, as we fund the next generation. But increasingly, we're seeing it's causing our entire housing system to develop a chronic shortage, incredible scarcity, and incredible harm that is coming to more people. You can see this in the decline of smaller starter home construction throughout our communities. And so one of the things that we've said is that our focus really needs to shift to housing as shelter that is trap proof. And this is in this type of smaller scale housing that can be implemented incrementally within existing neighborhoods. If you ask, what is the product here? The product of this home sale is actually the mortgage. A lot of changes, and this is laid out in a lot more detail in the Escaping the Housing Trap book, but that mortgage is almost of more value, and the flow of money through the economic system in Canada and the United States and other developed countries has resulted in the use of houses just as widgets that are used as a tool for building greater investment capacity. And the consequence of this is that a lot of our government responses have been to make it just easier for more people. So new income or new home buyers, you get a tax credit and you get added subsidies and you get sort of preferential rates, and we're just going to continue to bring in more people to borrow more money who end up having to pay more for housing. A massive wealth transfer occurring from those that are emerging to those that are already established. And that is going to have long-term consequences for us. And one of the challenges that this has also done in our communities is that these are great investment properties. And the realtor would tell you, look, it's low density, you get your own large lot, plus the city is providing all of the services, all of the things are coming out of the public purse from just a couple of tax holders that are paying a portion, but never enough, to be able to justify the amount of activity that is taking place on this site. This is what we get when we enable and require and forbid alternatives, or enable single-family housing and forbid the alternatives from emerging, that you have more infrastructure per unit, more infrastructure per mile per person, and very little tax revenue to pay for it. And as I think John said, we either have to add additional participants on this block, or we need to ask them to pay a lot more. But many of them are house rich, cash poor, so they're not actually in a position to be able to pay that much more in terms of taxes. And we're leaving out a whole ton of people that can't find housing. When we begin to embrace, this is not going to be an immediate overnight transformation where you suddenly populate the block with all these units. But what you are doing is you're creating a significantly robust tax base and human habitat. And if you add the Homer Simpson Plaza, where you can get his pizza, his donuts, his ice cream, and his beer, then you create a very vibrant neighborhood, a place that people want to be, and a place where many people can age through the various life cycles that they might be in. Daniel Harrigus, who was a co-author of the Escaping the Housing Trap book, was relaying a conversation he had at the Thanksgiving meal with an aunt of his wife's. So he was already on sort of tenuous waters, and she said, yeah, I don't want renters living here. And so he tremulously said, have you ever been a renter? And she said, well, yeah, when I was a student. And he said, would you have liked to live in a neighborhood like this? And she said, well, yeah. And he said, see, this is what we mean when we say, let's find ways to bring rental, bring opportunities for that broader cross-section of people to live within these places. And when we do this, we allow ourselves to actually address the service needs that we have in our communities. What is the consequence of our current pattern of development? As I said, that's making our places weak and fragile. This is what it looks like in Kansas City, where the massive increase in population of only 1.8 times has been met with a 27 times increase in the amount of infrastructure per person. That's huge. That means that you have not either added enough people to cover the increased costs, or you're expecting that person, sort of like Oprah, you get a pipe, you get a pipe, you get a pipe, but you've got to pay for it. And you got to pay for a lot more of it. And that is not something that somebody says, wakes up and like, oh, by golly, I can't wait to pay for my sewer pipe, but you gotta. Or else we don't pay for it, which is increasingly what we're seeing. South Bend, even worse, population decline in their community. So for your rural communities, you have to be very careful about this. And the significant cost of that horizontal expansion without thickening up neighborhoods, and in fact, even creating conditions where those neighborhoods are not allowed to thicken up and mature, results in massive public outlays of infrastructure costs. Even if the developer pays for it in the first life cycle, South Bend is old enough that they're now paying for everything that they previously were gifted, and they're having to return to the challenge that we face. Briefly, I'll touch on how this addresses the challenge that we face with housing. This is from Eric Kronberg down in Atlanta, but he said, here's the complexity conundrum that we find ourselves in. That single family is low brain damage, but also low returns, but you can kind of do that in any given day. And that's just a cycle. We see this happening over and over and over again. The only thing that's easy to do. Large multifamily, in areas where you have a market for it, it's really damaging. You have to do a lot of brain work, a lot of pleading, a lot of special deals, but you'll get it through eventually. But that anything else is the part that we need. The incremental infill, and we need to tip the scale so that it's not this amount of brain damage with low returns and high expenses. And so can we set a standard for ourselves? This should require very little in the way of going and bowing, going and genuflecting, going and having to hire the right land attorney to get your project through. And one of the ways that we do that is by upzoning, but doing so in a way that says, if you bring a compatible project, you're already approved to do it. But that won't be enough. One of the challenges that we face is that both of these are financial products. And in the market, if we think of the distribution of investment capital, there's always money in the top of the bell curve would represent abundance. There's lots of money for that. And there's lots of money now for the new emerging 5/1s that are starting to pop up, sort of the beige boxes that we begin to see in more and more of these places. And there's always going to be limited supply of capital available for high wealth homes, but they'll be fine. They'll manage. They'll sell a few stocks and bonds and be able to construct it. But the challenge is the capital needs to emerge in places that are that are for small scale development. And that can look like community lending. That can look like land trust stepping up, doing a lot of these things. Because these are the trap relievers. These are the ones that don't get caught up in that investment spiral. Your accessory apartment that some grandmother needs to be able to say, let's take a portion of this home through the front entry. You can either go into the main house or into the secondary apartment that's been built in there. Backyard cottages. I always say an ADU sounds clinical and abstract. It sounds like maybe a disease that you picked up somewhere. We always say, call it a coach house, call it a carriage house. Honey, I got us a coach house. Oh, wow, we're fancy people. Using the in vogue language. And this is one of those things, planners and even city staff will understand when you say ADU, but it sounds foreign. And the thing that we can do is to help people just understand these are not a threat, these are normal, and these can be really useful for you. Providing the opportunity for more starter homes, which are going to be by nature modest in size and suitable for people to live in. We need to be able to do exercises like examining a block where we know we have gaps. And again, more rural communities, you have gaps like this all over the place. The trouble is, the thing that is right now being incentivized to be built is this. And this provokes the backlash. This is your 3 years of development timelines. This is that sense, I don't live in the neighborhood that I used to live in. This is a project in my city in Delta, and you can see the contrast between the ways in which what was there and what comes in there feels so foreign. And the trouble that we have is because we've allowed all of these neighborhoods to really stagnate, we've lost sight of the planning structures that allow for gradual implementation, one by one, multiple projects maybe on the same street, but not everything being contiguous together. And one of the standards that you can say, especially in a rural community, if you want to preserve in your town centers more of that flavor, that character, is to say we prefer projects that don't require lot assembly. We prefer projects that retain the property lines because when we do that, you limit the scope or the scale of that project. And yes, they are still financially viable. Trust me, we have dozens and dozens, hundreds of examples of these types of projects actually penciling, and they can be built, especially when the city comes on side. But the challenge that we face is that in most places, development activity is just relegated to concentrated pockets, even as other areas are overlooked. And so if we want more entry-level housing or trap-proof housing, we need more incremental developers, and we need to make it easier for them to say yes. Many of them don't necessarily face a wall, but they face a tangle, and it drives them crazy and causes them to leave the industry. We put together a checklist for cities to ask, are you housing ready? Have you done core things? And these are the cities that so far have responded saying, yes, we've taken most of these steps, allowing single home conversions, permitting backyard cottages, legalizing starter homes. We put this into a toolkit. We have stories baked into them of each of these situations relieving housing pressure, and we tried to pick the most normal people. So it wasn't that we allowed eliminated minimum lot sizes so that somebody who's just come out of prison and drug addiction treatment is able to land in a home. They need a home. They absolutely do. But we said we need to lean into stories of just the most regular person that you need the most in your community if you were to take it from the person who is the most skeptical about these things and say, let's convince you that your mother should be able to live next door to you, instead of having to go somewhere else. And so we need to make these things possible. I'm mindful of my time, so I'm just going to just demonstrate the other key element is that we can actually set as standards for ourselves, whether at the county level, at the municipal level. We're seeing places say, let's make it possible to build the next increment, where with a 9th grade education and some trade instruction, you walk in at 9 and you leave by noon with a building permit in hand. One of the ways to do this is pre-approved building plans, catalogs of small-scale projects that you can take, basically much like a vending machine, say, I want this one. It spits out the plans so that instead of you bringing plans to the city says, we have a catalog of plans we have already approved. Not just things that we like, but once they've done the step, and sometimes you can say, take one project as a pilot project, do all of the approvals and say, if you build this, our fire chief has already signed off on it. Our water engineering staff are already signed off on it. Our hydro team or utilities team already knows where the hookups are going to be. So there's no site planning that's required in this context. Removing that guesswork is so crucial. Lastly, we also need a whole swarm of small-scale developers. If you're talking economic development, one of the things that economic development teams are doing is bringing in groups like the Incremental Development Alliance, bringing in Neighborhood Evolution, and saying, let's train 20, 30, 40, 50 small-scale developers to take on their first project or maybe their second. This is that lady that hangs drywall all week and does one of these projects in the weekend. This is that farm family that says, hey, we can probably cobble together a work crew, and we're going to do a couple of extra projects on the way. My dad built his own home while maintaining an 80-acre farm and running a dairy. He was able to do that because he had a little bit of help and he didn't run into the barriers that most people do as soon as you come into the urban boundaries. And so we can do this. We can lower the bar of entry. We can fund many small bets as Muskegon is doing, providing support for contractor training, technical assistance, helping with land prices. There's things that Minnesota has done around special assessments where instead of a special assessment for streets or for parks, they will say if you provide rent or below rate rent in, say, a backyard cottage, we will register on title the loan that we have lent to you in the form of a special assessment. It's for something we need. It benefits this property. Therefore, we can use the special assessments tool that's often used for other things and use it specifically to fund the creation of this type of housing. Cities in Florida are using their credit to backstop loan guarantees because they have great tools to claw back bad loans. They have great tools of forced sales, all of those other types of things. So it's very low risk for a city to say we're going to backstop the work that is taking place within our communities. And with that, I would definitely recommend if this is catching your interest and you want to share this with residents in particular who are maybe skeptical or unsure, definitely recommend checking out and sharing the toolkits that we've put together. We are deliberately designing them to be the most readable thing you can read on this topic, and I hope that this has been a bit of a touch on some of those core things. So with deep respect, thank you to the panelists as well. I think we've covered a wide range, and look forward to Libby taking over and leading us into time of questions. Thank you.
All right, thank you to our panelists for these various ideas. In our pre-conversations, we had kind of set up maybe some softball questions, but having heard all of them, I'm hoping you're ready for some of the harder questions of some of the key themes that have really bubbled up across all of your presentations. Are you ready? So one thing that very much popped up in various of these conversations made me think of, I believe it was Montana Governor Gianforte, who said in a public venue, the only thing that people hate more than sprawl is density. So thinking about what we've heard from all of you in terms of density, really at different levels of the conversation, I'm wondering if any of you would be willing to speak to what are the opportunities to change that conversation? What are the opportunities to change how people think about density? Because I think that's something that popped up across all of your remarks. So who would like to take that on?
Sure, I'll jump in and then turn it over to others. But I think people like their neighborhoods the way they are right now for tons of understandable reasons. They don't want more people parking on the street or changes to the trees that they love in their current neighborhood. But I think there's also some like status quo bias or fear of the unknown that drives those preferences. And when people see a little bit more density, there are lots of things they actually really like about it, like having nice restaurants, having a convenient coffee shop. I think a huge one is having kids be able to walk or take the bus to school, which often isn't possible when we're talking about new subdivisions across the U.S. So I think just kind of painting the picture of some of the positives of a little bit more density is part of the answer.
Another element, just by way of analogy, I would say if you go and look at your closet, if I graduated from university in 2007, so I still have some hoodies and I still have some old shirts that are from there. But one of the things that we've done with our neighborhoods is we basically created a condition in which that closet now is fully stocked. So we call it build out, the neighborhood is complete. And then that clothing, essentially to continue to the metaphor, we have two options. What we do with our clothing is every so often, if your wife tells you, or my wife will frequently tell me, you've got to get rid of that and bring in something new. And that something new fits me better. Actually just went to the tailor today to get a suit, or yesterday to get a suit fixed because it wasn't fitting me so well anymore and people could notice. And so we see that gradual adaptation, and the challenge that we have is we have to contend with the fact that people with the best of intentions but some really poor outcomes established systems in the 50s, the 60s, and the 70s that said this is a neighborhood that is built all at once to a finished state. And we bought the brochure and we said, let's just leave things as they are. And so if you think of your wardrobe, the idea now is that we sometimes will create fear in people because they see a neighborhood that suddenly has gone in a dramatic revelation. Everything's been tossed out and everything is brand new and it doesn't fit right. So that is one of the elements of trying to normalize gentle density, sort of that next increment from emerging. The other element of it is I don't actually think the average person is saying, I care about density. They care about, like, as you said, Emily, trees. I care about just like, does this still have that feel? And there are folks with good intentions, again, that have said we should never talk about neighborhood character because that's classist or racist. I've always said, talk to where people's concerns are, which I want to feel like I still recognize my neighborhood. And in that case, having things that say, make your homes, the new ones that are coming in, look a little bit like the ones that are there, is one of the reasons why the pre-approved building plans are really smart in places like San Antonio, where they said, let's take historic casitas or backyard cottages that already exist. And let's just say you can rebuild these in the historic district. And I said, no, build it throughout the entire city, allow it. So ironically, they said, there's one area you can build something that everybody in San Antonio recognizes as normal, as historical, as good, and they still restricted it just to the one little area that was grappling with growth. And so if we can begin to introduce those types of things, then it gives rise to modest townhome projects and things like that that begin to increase the density. Our cities have also not done themselves favors with things like dwellings per acre. Those types of metrics get really messed up because they don't actually reflect what's happening on the street. What could we do more with our corner lots? Mid-block, maybe we have to taper down some of the density. Your corner lot, that's not going to be that dramatic of a difference if it's 4 units or 5 units. And so on housing tours, I'll do walking tours. My favorite party trick is to look at a building. I'll be like, how many units are in this building? And then people will guess, and I'll be like, it doesn't matter. It's just a shell in which activity occurs. And I think with smaller development, smaller unit sizes, that can really help in existing neighborhoods. They see monster homes don't want that. We're like, that's a monster single family home for 2 people who don't even live here half the year. What if we did something else and did something that would fit better in your neighborhood? Yeah.
Yeah, just picking up on this too. I think of where my mom lives, and it's like a little development. She calls it the villas. It says the villas when you come in there, so like you could name it something fancy like that. But it's essentially like 15 twin homes on maybe 6 to 8 acres, and so it's market rate, but it's also it's both retirees looking to, we're calling them off-ramping from the big house to something they don't have to take as much care of, but also kind of first-time home buyers, maybe the next step up or something. So it fits well, 2-bedroom, 2-bath, stall and a half garage or something, and it's very walkable. It's close to things, and then also thinking about the trends in single-family households. It really fits that market too, and just that's some of what I'm thinking about. Just show examples of what's worked.
I guess I'll just finish off by saying the one area of synergy happening between the strategic housing framework and the 6 regions, 1 Nebraska that I mentioned is reclaiming vacant properties. So rural Nebraska will get behind communities where they're seeing dilapidated homes, and there's been some land bank policy in Nebraska to try to encourage that with the city. But if you're addressing these nuisance properties and working as a city to do it, then you're bringing neighborhood back. And there was actually just a webinar last week from Ord, Nebraska, and the work that they're doing. And I think mentioned earlier if you put a brewery in a small town, that town thrives like you wouldn't believe. But anyway, the owner is also the economic development administrator, but they've done some great work just getting these properties to look better and transforming the neighborhood that way.
Thank you for that. So another of the core connections that crossed all of our morning speakers was talking about not only density, but how density has an interplay with infrastructure. And certainly in some of the Minneapolis Fed's conversations across North Dakota, the key theme that keeps coming up is infrastructure, infrastructure, infrastructure. Who pays to build it? Building on what Norm said, who pays to maintain it? And how those pieces come together. So I'd like to toss to here, in terms of building, maintaining, and retaining infrastructure for housing, what works?
This is a question I get a lot when I work in communities, and I kind of mentioned that in my opening that communities aren't sure what to do there because it is really expensive, and if they want to do 1 acre lots and put in infrastructure to incentivize developers to come in, that may also limit what developers are used to doing on a lot. And so maybe when I talk to developers in my community, they're like, they have solutions for it. They'll just they'll build it into their pro forma and it gets financed somehow, but they like having the discretion of deciding where the infrastructure goes based on the density of units they're putting together. And so maybe that requires planned unit development where they're shrinking the size of the lots a little bit to spread the cost of infrastructure across different households. I'm not seeing too many communities that are just going to put in infrastructure without knowing what's going to go in there yet, because it is really expensive. And engineering costs, we've heard from the community of Crookston that we're working with on a 3-acre site, 18 unit twin homes, somewhere between 1.2 million and 1.8 million engineering estimates for those units. And that's an infill site right on upgraded infrastructure. And so and then it depends on the road size. Do you need fire trucks to get in there? Do you want it to be a public road and trash pickup, or do you want a private road that's smaller? But that also limits. That's another maintenance issue. And then you involve HOAs to take care of the trash and the plowing and the mowing and stuff. So that's another layer of not government, but another layer of
A little bit outside my wheelhouse, but one thing I will say is relationships, collaboration, communicating, over-communicating. We're trying to now get in front of the League of Municipalities when they have their annual conferences and talk about zoning and hear back from them. We always hear a different perspective that we didn't think about. But if you're communicating with cities, we also have a toolkit that we created on that pillar 2. When I mentioned the 4 pillars, it's the toolkit to increase housing supply. So it addresses some of these specifics. But if we're educating and communicating, then hopefully there's not a lot of surprises and people are working together for the same common good.
Another key factor is outlining what has led to the state of infrastructure today. We call this the intergenerational dine and dash, which is intentionally provocative, but it's many of our existing neighborhoods have exhausted the state of their infrastructure because they never actually contributed the sufficient reserves necessary to keep it up and keep it going. And so if you imagine, I walk into a very fancy restaurant, I enjoy a couple of bottles of wine, couple of desserts, couple of entrees, really enjoy that. And then I say, when my son shows up next, he will cover the rest of the bill. I'll pay $15 up front. Well, that becomes the challenge that we have actually created. And so we have this situation. A lot of cities have used slogans like growth needs to pay for growth. And so the idea is any new entrant basically needs to catch up the neighborhood to a state that is suitable for the next generation. But that's a monumental task when the state of the neighborhood's infrastructure is actually at a pretty low rate. And a pipe is a great pipe until it's not. And then you've got a sudden drop off in performance. You've got leaking, you've got ruptures, all of those sort of core challenges. And a lot of neighborhoods are trying to play that game and say, well, so long as we don't touch anything, we'll limp along a little bit longer. And so at Strong Towns, I know I'm being provocative with the language of dine and dash and things like that. But when we start to pull back the layers with the Strong Towns Finance Decoder, for example, looking at annual reports over years to see what the state of your physical infrastructure is based on the way that you account for it in your communities, we're able to demonstrate the gradual decline in most of our communities and what they're experiencing to bring people to the table to say, this is just your cholesterol report, your heart's in pretty bad shape, we're gonna have to do some work on this. And out of that, then that can actually introduce that question, which is there anything that helps us in this condition? And you're like, yep, new entrants to the table. But you're gonna have to on-ramp them, make that possible for them, rather than holding them at bay or holding them ransom. If you're the first person to dig up the pipe, you're responsible for the pipe all the way back to, miles of pipe in order to fix that. That is definitely one of the challenges. The last bit is be very circumspect about your leapfrog developments, those ones that are further stretching your systems. They are going to be a drain on your coffers for the next 30, 40 years until other development catches up with it. And I understand the impulse to build where it's easiest, but it comes at a cost. And we have helped to try to popularize the community life cycle cost calculator, looking at the long range, over 75 years, what is the expected infrastructure impact of a development, rather than upfront, did the developer pay for it? Okay, good, then let's accept it as infrastructure gifted to the city.
So I'd like to turn to one of the questions that came in. A moment ago, John mentioned communication And we know that the city of Bismarck is redoing its zoning code. I learned this morning that Fargo is redoing its zoning code. And the question that came in from one of you is there any guidance on how to communicate the influence of changes to zoning code to residents and communities?
I can just share a personal experience when I spoke at the League of Municipalities in front of a bunch of city staff, and I started talking about model zoning, and it got a little heated. And I just explained that I go to a lot of meetings where there's a lot of problems being discussed, and that's just one of those common themes that comes up is zoning challenges. And then, you know, what we did is we saw as an opportunity to reach out to that person and get their contact. I actually said, you've got great questions. You should attend our strategic housing framework council, because we could use that input. Because if everybody's saying we need more zoning, but we don't have somebody kind of giving us the boots on the ground. So I always try to include the naysayers, I suppose. And I keep hearing stories about how opponents become proponents once you start communicating and sharing and learning from each other.
And I just talk about tax base and increasing property taxes rates on the payers already, and just let's maximize the properties that are within the jurisdiction by adding more density to housing and spreading the tax burden across more payers, essentially. So people get really upset when they see major increases in their tax bill. I do. Not really, but I do. But if we could spread that across, that works well across like political divisions or whatever thoughts about, we don't want that type of unit in our neighborhood. But I love the incremental change over time, because that does feel like it's not as abrupt and startling, you know.
Yeah, agree with what everyone has said. I've done a lot of work studying different examples of zoning changes and what happens following those zoning changes. And to Nate's point, I think it's important to emphasize to residents that even if a zoning change seems big, the changes to the real world are going to take decades to play out. Oftentimes there will be, a big zoning change, and just a few property owners will take advantage of that in the near term, but we'll still be seeing the effects of being able to add incrementally more people to the neighborhood for many, many years after that change takes place.
The last recommendation is you can take steps with your growth plans and other things like that, but if it's a good idea, introduce it earlier. If you've ever been in a family meeting, and I've had a few of these in my life, where it's everybody get together. Okay, we are talking about finances. We're talking about mom and dad's relationship. We're talking about what's next. We're talking about all of these things, and that can feel like those community conversations where one person is worked up about this, somebody else is worked up about this, and the whole project comes into disrepute because, man, that meeting was a disaster. And the challenge can come that a lot of our communities and our planning profession, I think, is implicated in this, are very allergic to gradual change. And the idea of just gradual code reform on the most inoffensive sort of, oh, I didn't realize that was now permissible. And there are things you can do, like the city of Portland maintains regular communication with the building community to say, we just liberalized this. We just opened up these opportunities. The city of Norman, Oklahoma, they said, we've had this parking policy kicking around. We don't want to have to deal with it in a big code reform. So they just changed one word from you must have this much parking to you should. And the should became a point where if you chose not to and you provided a good rationalization where you didn't have to meet that standard. That is one of those small things that we can do. And so it's piecemeal rather than all at once. The consultants won't like that because they get paid to deliver the final report, and then they watch on the evening news and they're like, well, another place where they didn't accept our recommendations, shucks. Meanwhile, the staff are the ones that are like, but I wish we could have just gotten that good stuff in. And so if we know that there are small things that would make a small difference, that can look like the red tape or sort of the bureaucracy sort of battling impulses. A council member can sit through each of the development meetings that happens with city staff. I've learned of council members that they've said, I won't vote on it when it comes to council, but I want to understand the process. And each time they're like, why is that there? And that should be the precursor to be like, and we drew up the rules and next week we're voting on it. The city of Bellingham is looking to do this where they're saying, bring back every couple of weeks an update, an update, an update, an update. And they're not doing the whole thing. And I know there are some of you who are like, that is not possible, but we know cities that are doing this. Kalamazoo, Michigan, again, very incremental, piecemeal tackling these things. And if it creates incoherence, which it isn't, but even if it did, that incoherence would come out in the wash over time, and then you can bring that back. So the city of Edmonton said, we're allowing up to 8 units on mid-block development in existing neighborhoods. If the lot sizes admitted it, they just rolled it back to 6 units. Because they learned from the input, they basically got their knuckles wrapped, but it wasn't a result of one big massive change, but continuing introduction of change. And so change management is a really important part of it. And the idea of getting everybody hyped up and then pass or fail is the opposite of what we need to be doing.
Thank you. So you already mentioned this word. There's one word that we haven't talked about. We've talked about density. We've talked about infrastructure. The other piece that Norm gave a teaser on is parking. And so a question that came in is to what extent parking requirements, and then reading the question that came in, I think about parking requirements or requirements for parking, whether it is expectations or formal municipal requirements. Do parking requirements create a constraint on what is possible in terms of density that can be built on land?
Yes, absolutely. Parking requirements are huge, especially when we're talking about multifamily housing or when we're talking about infill construction. They add enormous amounts of cost to projects, either in terms of lost units that are given over to surface parking instead of housing, or if we're talking about like a downtown project that might need garage parking, it can cost tens of thousands, even $100,000 just to build the parking needed for each apartment. And we've seen some real success in cities like Minneapolis, where changing parking requirements has made an enormous difference in the feasibility of multifamily construction.
We do deal with this with my consultant Brianne, who helps us do this work and planning, and she does talk about parking minimum requirements and all that stuff. And but she recalls some of community meetings where more than once people have said, children are gonna die if you reduce the parking lot sizes. And so where are people gonna park? That's hasn't been the case. So it is. Yeah, to have the empty, wasted parking lot space that's really costly to put in, and you have increasing single-family households that maybe have 2 bedrooms where you may require a parking space per bedroom. It doesn't always make sense. So,
I've never heard of death by parking lot absence. That's quite something. I've thought of many ways to die, but never that. One of the things we would say is there's always a market requirement for parking. But the idea that the municipally imposed requirements are right is completely at odds, one, with the number of variances that are requested, any kind of seniors project, and then kind of low income project. Many rental projects would be able to be more affordable if the developers who own the property were able to say, we rent units and we rent parking spaces, but we're not intricately tying those. Because if I have the option to be able to rent 2 parking spaces and pay my monthly rent, I might choose to just have 1 space. Or I might even say, this is my incentive, the kick in the pants that I need to consider an alternative if my life circumstances allow it, while other people who say, I need that 3rd vehicle are able to get that 3rd parking space at no cost or at cost to them, but an actual factored in cost rather than just the absorbed cost that we see around us. And then the other part of it is the use of the public realm for parking is still a factor, even where all these parking requirements exist, because people use their garages for storage. They use their garages for granny. They use their garages or other parking areas for where their work car or their project car is, and they continue to use the street. And so if we have on-street parking issues, they need to be addressed with parking management tools that have been around for decades. And I would definitely call out parking benefit districts are your buddies. They are amazing. It means you cannot rely as a municipality on parking revenues going into your general fund, but what you can do is incentivize great streets by allowing the money raised in certain areas from meters to be plugged right back into improvements in those spaces to make them more walkable, more suitable, more beneficial for local businesses. And all of a sudden, as we see in so many places that have implemented them, the business community switches from saying, we don't want those parking meters, they're driving away our customers, to saying the fact that our customers pay $1 and that dollar goes into basically the community's pocket right here and improves the street makes a huge difference. And the reality is, not just in retail areas, this can benefit even on slightly built up neighborhood streets where you begin to see a cost for parking to use the public realm and the costs get plowed back into local improvements. It makes a huge difference when you see the benefits emerge from what you're doing. So parking benefit districts, remembering there's always a market requirement for parking. So it's not that you just do away with it or ban it. I would say, strong towns, we would say, never introduce parking maximums. It's trying to do the same math just backwards, and it doesn't work either. Yeah.
So there have been a lot of great questions that have been coming in through Pigeonhole. Thank you, and I apologize that we're not going to get to all of these because my nose tells me that lunch is beginning to appear outside. But we did offer all of our panelists the opportunity to have the magic wand about what they would do, what they would change in order to improve housing supply and affordability. So I want to give each of them the opportunity to share that, recognizing that we don't really have the power to make that happen, but we'd like to know what they're thinking about. Let's start with Emily.
If I could just change one thing in zoning across U.S. cities, I would focus on those minimum lot size requirements and allowing people to build houses on smaller pieces of land at more affordable prices. I think that's like one tool that could have a big impact in lots of different types of places.
And I'm thinking about generally cost shifting of not having national and state investments in local areas. But to maybe counter that, if we can improve the state housing tax credits, make them a little broader or the cap a little more so people can direct where their tax dollars go to into housing projects.
I guess right now I'm thinking a lot about the continuum of care agencies that are struggling to keep their doors open because of HUD funding. So I guess the lesson through this is how do we as a state work together to address things like ending homelessness and making sure homes are accessible.
And with my magic wand, I would definitely have each municipality have a catalog of pre-approved designs, borrow widely, be the second community or the third to introduce it, and then for one bedroom cottages and things like that, all the way up to about 4plexes or even 6plexes if you want to be ambitious. Take away the guesswork, make it predictable, and you will be amazed at the number of small scale developers that are going to emerge to do maybe their first or their second project. You'll still, the big developers you'll always have with you, but you will be able to unlock and unleash a new swarm of small scale developers that'll do it not necessarily for max profits, but for greater opportunity within the neighborhood.
Thank you. Will you join me in thanking our panel for their insights? So we now have a 15-minute break before the lunchtime presentation. Food is available in the hallway, and we'll be getting started again at noon. So enjoy the break. And our panelists will all be here for at least a few more minutes to ask more individual questions. Thank you.
Good afternoon, everybody. So sorry to interrupt, but I'm sure a lot of really great conversations happening at the tables today based on who's in the room. Thank you all for being here, especially thanks to folks from places like United Way, Cast Clay, North Dakota Housing Finance Agency, and the League of Cities, and the ARP, people who have helped us understand more about North Dakota's housing markets and how we can hopefully add some value to the conversations around housing affordability with our own presentation and the panelists we've invited today. So depending how you feel about charts, graphs, and numbers, Libby and I are going to either be providing you with an extra vegetable or an extra cookie with this presentation here as you finish your lunches. We'll be talking about what we've learned about housing affordability in North Dakota as we've looked to the numbers after talking with folks like yourselves about what's going on across the state. Before I go too much further, I'm going to repeat Eileen's disclaimer from earlier today. The views I'm expressing here today are my own and not necessarily those of the Federal Reserve Bank of Minneapolis or the Federal Reserve System, and that goes for everybody else presenting today as well. So we're going to start with going into a little more detail about why folks from the Minneapolis Fed are here today talking to you about housing. We're then going to turn to what we see when we examine homeownership trends in North Dakota. We'll then go to a conversation about the state's rental markets, and we'll wrap up with what we see as potentially being around the corner based on all of that data that we're seeing. So as Eileen said, we are the 9th district of the Federal Reserve Bank system. So there are 12 regional Federal Reserve Banks that are spread across the nation. That design was created with the intention that the nation's central bank shouldn't be overly influenced by any one particular economic region of the nation. This is probably not how you would draw these districts today, but it still works pretty well for the purpose. So every bank within the system has a community development and engagement team, and we pursue the bank's dual mandate, which is given to us by Congress to go after maximum employment and stable prices with all the tools that Congress has given to us. And we do that work with an eye towards low and moderate income communities. So what that looks like a lot of times is going out into the urban areas of our state and also the smaller towns and rural areas and talking to people to understand what they see as emerging challenges and emerging success stories and how people in those areas are gaining access to economic prosperity. And we hope that's part of a virtuous cycle where we are coming back with different stories. We take that to the economists and data scientists who work at the Fed, and they look to the numbers and are able to see what stories are being seen in those numbers, what might be missing, and how things are sort of developing over time. We then go back into rooms like this where we present our findings and we hear how those match up with what people are experiencing and what might have changed since the last time we were around. So thanks for helping us do our job. When we've been in North Dakota over the last few years, these are some of the trends that we've heard most often. We hear that times have been hard for home buyers, really outside of the most high income categories. We've heard that lower income renters in particular are struggling to find units that they can afford. We've heard about employers concerned about their ability to expand or retain their current workforce. We heard about this a bit on the first panel, but everywhere we go, whether it's restaurant owners or school systems or hospitals, we hear some version of the story where people are leaving or turning down job offers because they can't find a place for their family to live. We also hear about an increasingly visible homeless population, a lack of investment from national players into the housing markets of North Dakota. Barriers to production, we'll talk about some of those today, whether it's on the regulatory front or some of the infrastructure challenges we heard earlier today. And finally, we hear a lot of debates over the best ways to measure the housing need within a community. So Libby and I are going to really focus on these four within that, which is not to say that any of the others are any more or less important. It's just where we think our value add is during this conversation today. I think most of you are probably aware when we speak about housing affordability and use terms like cost burdened, we're talking about whether a household is spending 30% or more of their income on their housing costs. So most simply, if a household is spending more than 30% of their income on those housing expenses, we consider them to be in an unaffordable situation. And it's really important to note that this definition covers both what people are paying and what they're earning, because it's It's the combination of those that creates affordability or unaffordability. And over time, both of those change as well. I think people are always cognizant of how housing markets are moving, but the economy moves in other ways as well, and people's incomes do go up or down over time. So with that foundation in mind, I'll turn now to talk about what we see in homeownership markets across North Dakota. So this data is for the nation. It comes from the Homeownership Affordability Monitor, which is a tool put together by some of our colleagues at the Federal Reserve Bank of Atlanta. And as that line moves over time, where it's above 100, that means that the median or household income in an area can afford to buy and own the median home that's been sold in an area. So in other words, that family that's earning right at the median household income, if they were to buy the middle home in the market, they could do so. And so one way to think about it is as they're shopping, they can afford about half of the homes that are out there. So when the number's above 100, it means those families have even more options than that. When it's below 100, it means they're gonna have even less. So with that in mind, I'm gonna draw the 100 line across there. And I want you to kind of try to guess where you think homes have been affordable in the country first, and then I'll turn to some local data. How do you think affordability has been changing over time? And what we see is coming out of the Great Recession, we started to see affordability kind of persist for quite a while before in more recent years it has really taken a downward turn at the national level. Now think about in your mind how Bismarck might compare to these national figures. And what we see here is Bismarck for a long time has been more affordable than the national picture and remains so today. But over time, Bismarck has kind of gotten closer to where we see the rest of the nation being in terms of affordability. And like much of the rest of the nation has now entered an era where homes are generally not affordable to those median households. The tool does let us look at different cities across the state. And the story of Bismarck is pretty similar to the story in most other areas, with the exception of Grand Forks, where the data is a little noisier. And if we turn back to the nation and we think not of the nation as a whole, but if you think about other comparison cities you might have when you think about how Bismarck, Fargo, Grand Forks, how these places might stack up against other parts of the country, I started alphabetizing these to not give away the answers, because I kind of like people thinking, like, we hear a lot about how people perceive North Dakota in terms of its affordability compared to other places. And what we see when we look is that cities here are certainly not the most or the least, the most unaffordable or the least affordable. But the spread is kind of wide across the peers here. So if that's what we know about how affordable it is to buy a home right now, what do we know about the people who already own a home and how their affordability has been changing over time? When we look at cost burden rates for people who are currently homeowners, at the left side of the graph, you see the 2008 era. About 18% of people were paying more than 30% of their income to keep up their housing costs. That went down over time and is now increasing again. So not back to that peak that occurred pre-2010, but moving in a direction of unaffordability. If you're thinking about why that might be the case, the first place a lot of people's minds go is mortgage rates, and that is a good place to go first. Mortgage rates have changed quite a lot in the last few years, and it's not just the scale of the change, but the pace of it that is pretty atypical when you look across this entire time frame. And when we map affordability in Bismarck to these changes, all of these light blue areas are the times when affordability was increasing in Bismarck. So generally, as mortgage rates go down, affordability goes up. That's probably not a huge surprise. But mortgage rates, while they might be one of the most important factors in affordability for homeowners, they're not the only factor, as everybody who pays monthly housing costs know. So this is a comparison of how the homeownership vacancy rate has changed over time. So a lot of realtors and other folks we talk to in the industry tell us, and there's some research out there that kind of supports this notion, when the vacancy rate in the homeownership market sits between 1.5% and 2%, that's what people consider a healthy or balanced rate. So that's where realtors will tell you buyers and sellers are coming to the table feeling like they have kind of the same bargaining power. When there's more vacant homes, it's a situation where people feel like buyers have more power. When there's fewer vacant homes, sellers feel like they might be able to hold out for more money or get more out of what they want out of the transaction. And so the gold line here is the vacancy rate in North Dakota. And the teal line is a typical home price in North Dakota. So you see it does map pretty well. When that vacancy rate was in the sort of healthy range, you did see prices moderate their growth. So another set of costs is everything that's not your mortgage. A colleague and I recently looked at some national data that tracks homeowner costs over time. It's also important to note that 58% of people who own a home have a mortgage, so there are quite a few people who own their home but are not paying that monthly mortgage bill. What we saw in the most recent data is that mortgages actually declined mortgage payments actually declined once you adjust for inflation by about $14, which is less about the number and more about the sense that mortgage payments haven't changed a whole lot since 2021 when you're looking at 2023. But the non-mortgage costs of homeownership went up by $56 a month, or a little over $600 a year, or not a little over $600 a year, almost $700 a year, which is not the same scale of change you saw from some of those mortgage rate changes perhaps, but is a significant expenditure for a lot of households. If you care about homeownership affordability because you care about how many people are ultimately able to afford homeownership, here's the trends in the homeownership rate in North Dakota and the nation. This is the most typical way of measuring homeownership, which is actually a measure of owner occupancy rate. So under this measure, you're looking at how many households there are in a state, and then you're asking how many of those homes are occupied by somebody who owns the home versus somebody who is renting the home. And we've been examining different ways of thinking about homeownership, and I'll explain those now. So if you think about a fictional town with 3 houses, you can think about those 3 houses being occupied by situations that aren't necessarily the standard, but aren't that uncommon. So situation 1 is a multi-generational household where grandma and grandpa have moved in with their children and their children's children. Situation 2 might be a young college student or recent graduate who's living at home to offset some of their expenses. And situation number 3 is a young homeowner who is renting out part of their home to offset their housing expenses. So this is not, so in this situation, if we were using the typical homeownership measure, you'd say this is 100% homeownership rate. But you might be more interested in what the ownership rate is among the adults here. So there's 9 adults in this story, 5 of them own their home. So under this approach, it's actually a 56% homeownership rate. So it's a very different way of thinking about how to actually measure homeownership. And, you know, to note that this is not to privilege any particular, you know, type of homeownership as better than the other. My 8-year-old has told us he's going to live with us until he's like 60. So there are certainly many reasons people would want to have these alternative measures, but you can also see how the story might change if you measure what you're interested in a different way. And certainly when we look at North Dakota, we see that the trend itself does not change that much. So like in the typical measure, homeownership peaked in 2008 era, had declined for a while and is climbing back up towards that peak, hasn't quite reached it yet. But the position of North Dakota relative to the nation changes quite a bit. So whereas in the old measure, North Dakota was ranked 41st in homeownership over this time period, with this alternative measure, it's 13th. This other approach also lets us look at particular subgroups of homeowners to explore how their homeownership rates have changed over time. And we're still examining a lot of different approaches to this, but age is one interesting factor to look at, given how age even showed up in the panel conversation earlier today. And what we see in North Dakota is that since 2008, there's been a steady increase in the number of people 65 and older who own their home, kind of a steady Eddie picture for people younger, 35 and younger, but for the ages in between, those are where you see that trend at a state level playing out, where declining since 2008, recovering a bit, but still not back to where it was peaking. So to sum up the high-level trends that stood out to us in the data when we were examining North Dakota, Homeownership affordability is down. Mortgage rates play a big part in that story, but other costs are increasing too with a smaller impact. Homeownership has been approaching its long-term peak for a few years, but the latest data show that growth in the rate might be slowing, and the trends are definitely varying by different groups, including age, as we show here. And with that, I'll turn it over to Libby to talk about the rental side of the picture.
Thank you, and thank you, Ben, for talking about home ownership. In the next chunk, I'll talk about the rental market, so the other side of the picture in terms of the overall housing stock. And before we get started, I just want to take a moment and just kind of lay out more broadly what lies at the intersection between housing structure type and tenure in terms of whether or not a unit is owned or rented. So on this chart, the greenish teal color are all of the owner-occupied homes in the state of North Dakota. So as Ben's numbers laid out, about 60% of occupied homes in the state of North Dakota are owner-occupied. So one of the owners is living in that particular home. That leaves not quite 40% of the occupied units as being rental units. And one of the key things I want you to see in looking at this is the size of the upper left gold corner on this chart, which is the share of overall rental units that are larger apartment buildings of 20 units or more. So when we think about rental units, there's often a jump to, oh, that's the apartment building around the corner. That's the apartment building down the street. But when we actually look into the details about which types of units are actually in the rental housing stock, 40% of them are those larger 20 unit and plus multifamily apartment buildings. But we see a significant share of units that are rented that are smaller multifamily, that are the duplexes, triplexes going down to the bottom, significant share of single family detached units that are also in the rental housing stock. So as I go through some of the numbers about what is happening in the rental housing market, I want you to have in your mind not only the multifamily apartments, but that bigger array of what types of units really are contributing to the rental market and what the level of affordability is in that market. So this fall, maybe it was all of the back to school, first day of school photos that were all over social media a month or two ago. I've been really thinking about the question about when we're thinking about rental affordability, thinking about a new elementary school teacher and thinking a new elementary school teacher is the type of position. Ben mentioned the challenges that some school systems are having in attracting and retaining their staff. A new elementary school teacher should be able to afford a typical rent in that area. And so going back to 2018, in the areas in North Dakota where we can access the true comprehensive data, Bismarck, Fargo, and Grand Forks, the housing budget is in the teal, and the housing budget is going to that level of affordability, saying that this is 30% of monthly income. And in terms of how we think about affordability, 30% is the threshold. So the teal is that monthly housing budget, and then the blue lines are what typical rents in those communities are, with a little bit extra built in for utility costs. And in 2018, in the 3 metro areas, the housing budget for those new elementary school teachers comfortably was more than what their housing costs would have been. Fast forward up until 2024, here we see that the housing budget, again the teal, is greater than the housing costs in only 2 of North Dakota's metro areas, those being Grand Forks and then Minot, for which data became available by 2024. But looking at Bismarck and Fargo, the elementary school wages were not enough to accommodate typical housing costs, typical rental housing costs in those locations. So this is part of an overall trend of increasing challenges for affordability across wages and really across places. So just to be clear, Bismarck and Fargo, the housing would be unaffordable for that new elementary school teacher. So putting this into a broader context, one of the key drivers of what's happening in rents is what's happening in vacancy rates. So certainly when the owners of rental housing across this array, when vacancy rates are higher, they're going to be more interested in dropping rents. When vacancy rates are tight and they can be picky about who their renters are, then we see rents beginning to go up. So whereas Ben mentioned that the healthy vacancy rate for home ownership markets is about 1.5% to 2%, in the rental market, that healthy level is more in the 7 to 9% because there's enough ebb and flow of renters and units. So this particular chart is looking at North Dakota and some of its neighboring states within our 9th district, and noticing the fact that for a number of years, the rental market in North Dakota did have some fairly high vacancy rates, very much in the teens. But in the most recent information, we see there's rental vacancy rates dropping back down into that more healthy area and looking like an overall more balanced rental market. But when we look specifically at North Dakota, and then I'm going to jump to some different data that's looking at the more recent era, when we see overall there's vacancy rates dropping, as we move from all rental units into the apartment rental markets in some of the major metropolitan areas, this is you looking at a different data source, CoStar, that is talking to the owners of apartment buildings. So again, putting that into the overall context, here we see that in the North Dakota metros where we can access data, the vacancy rates in apartments have all dropped below that level of healthy vacancy rates. So some certainly had that higher a few years back, but now all of those are below the area of those healthy vacancy rates. So vacancy rates are getting tighter, and with that we see increased pressure on what's happening in terms of rent as the owners can afford to be finicky about who their renters are. So with that, looking at how wages compare to rents, and this is looking for North Dakota at some of the same information that Nate showed earlier for a specific county in Minnesota. And so the question is, how do wages compare to rents? So in the gold, we see the housing wage. So that would be looking at what typical wages are and calibrating that to what typical housing costs are and saying this is the housing wage for a 1-bedroom apartment, $16.10 an hour. For a 2-bedroom, that housing wage would be $19.47 an hour. Now, when we take this information and add in what an array of typical occupations are that one would think would be able to afford rental housing, we see tens of thousands of North Dakotans in these occupations who are unable to afford a 1-bedroom or a 2-bedroom apartment. So just to call out some of these occupations, waiters and waitresses, childcare workers, cashiers, are all earning typical wages below what would be necessary to afford a 1-bedroom apartment. And then looking at occupations such as janitors and cleaners, looking at retail salespeople, looking at home health and personal care aides, one of the largest growing occupations across the country as we're all aging. These are occupations that cannot afford that housing wage for the 2-bedroom apartment. So with these trends around where wages are and what rents are, we see the increasing share of renters who are paying more than 30% of their income on housing costs, or as housing people say, the people who are experiencing housing cost burden. So this is looking at these large areas in North Dakota, the public use microdata areas, the PUMAs, which is a Census Bureau way of slicing up the state of North Dakota. And here we see that in the Jamestown area, it is the lowest share of people who are paying more than 30% at only 1 in 5 renters. Jumping up to in eastern North Dakota, in the Grand Forks region, in the Fargo region, it's over 1 in 4 renter households are paying more than 30% of their income on housing costs and therefore are experiencing housing unaffordability. We see this not only with an array of geographic differences, but also income differences. So those of you in the housing world know that we like to bucket out households by income levels as a share of area median income. So on the very left are low income households. So these would be households that are earning less than 80% of area median income. In North Dakota, only 17% of those households are paying more than 30% of their income on their housing costs. When we go one column over to look at the very low income households, so those who are earning no more than 50% of the area median income, nearly 2 in 3 rental households are paying more than 30% of their income on housing costs. And moving to extremely low income households, so these are the households earning not more than 30% of the area median income in their areas. Nearly 84% of those rental households are paying more than 30% of their income on housing costs. So these are the share of households who are experiencing moderate housing cost burden or who are living in housing that is unaffordable to them by traditional definitions. We can also look in and see what share are paying more than 50% of their monthly income on their housing costs. And for the low and very low, it's a relatively low share who are paying that 50%. But when we look at the extremely low income households, nearly 2 in 3 of those rental households are paying at least 50% of their monthly income on housing costs, leaving less than half of their income for all of the other housing life costs, whether that is looking at food, looking at healthcare, any other pieces. They only have less than 50% of their income available to them. So one final piece in looking at this is just wanting to get a better sense of who some of these households are who are extremely low income. And so this is using some information compiled by the National Low Income Housing Coalition. And so nearly 1/3 of these households are actually in the labor force. Another chunk of these individuals are people who are living with a disability. Over 1 in 3 of these households are seniors, so people who are age 65 and above. There's some students, some single caregivers in this pool. But when we think about who are these extremely low income rental households, many of them are in the labor force, many are seniors. And so thinking about who are the households who are paying more than 30%, more than 50% of their monthly income on housing costs. So to wrap this section up with some takeaways about the rental market, one piece is to note that after years of elevation, the supply of vacant rental opportunities has returned to healthy vacancy levels at the statewide sense. In particular markets looking at apartments, the vacancy levels are below healthy levels, indicating some challenges. With that, we see rental affordability falling. We see households are paying more of their income on rent and on their housing costs. And then the affordability challenges are the most pronounced for the lowest income households. So with that, I'll turn it back over to Ben for the next section.
Thanks, Libby. So you heard us talk a lot about prices. You heard us talk a lot about incomes. You heard us talk a lot about supply. Now we're going to try to tie those concepts together a bit more and understand why we think about them all in Congress with each other and why what we think that might tell us about what might be coming in the future if we were to look at these data again in a few years about North Dakota. So a concept that economists have long theorized exists within the housing market is something called filtering, which is the process by which more expensive units become relatively cheaper over time. And over the last few years, there's been a great wealth of data that's been created that has helped people dig into this a little bit more from a quantitative rather than a theoretical approach. So I'm going to talk about one study that looks at how the housing market moves over time when a new unit comes online. So if you think about a new unit coming into the market, somebody's hopefully going to live there. Otherwise, you'll have some very disappointed investors and property owners. And the people who live there, they might come from outside of a market. So they might be somebody moving from a different city or town to come live in a new city or town. And they might be somebody who already lives in that town, like those examples we talked about earlier, who is deciding to move out of their parents' house or form a new household for some other reason. So if that's the case, you kind of see the chain of moves never really kicks off. But what happens in most cases is somebody is going to move from an older unit into that newer unit. And oftentimes that older unit will be slightly less expensive. That whole process then starts over as there's a new empty unit on the market. And if you follow that through all of its steps over time and you look at in aggregate what happens across a whole market as units are coming online, what one recent paper points out is that every 100 units of new construction in the rental side of the picture gives you about 70 new units in a lower cost area of the same city. So this is saying that even though it might not make sense that a new apartment unit that's not subsidized, it doesn't have any income restriction on it coming into the market is going to have ramifications for affordability for lower income households, it is the case that these markets do connect to each other in really important ways that we're still learning to understand. And this doesn't just factor into the rental market. The same thing happens in the homeownership market as well. So we've heard a story a lot of times as we were having conversations about zoning and other land use regulations, where a lot of times somebody will say something along the lines of, my city made it easier to build smaller houses. Somebody came in and built smaller houses, but they're still really expensive new houses. And while that may be true, the same principle plays out in the single family market. So what the data show us there is that as people sell their homes over time, the further you get from the first owner and the first sale, the repeat sale will be to somebody who earns relatively less income than the person selling it. So maybe the simplest way to think about that is you're often the most high income person who will be buying your home. And what's also really important about the data and the research that support this theory is that it's not the same in every metro. So in places where it is easier to build new homes, the data show that that process is more intense. So homes that were previously only accessible to higher income earners become accessible to relatively lower income earners over time at a quicker rate. So supply is really important for understanding how affordability might change over time. We've also been doing a lot of work to understand what restrictions on new supply might be. People typically explain this to us as the obstacles to them producing more housing coming from the 5 L's, which is great because everybody loves alliteration. So land refers to the fact that if you're going to build something, you have to have a piece of land to build it on, and prices for land change over time and across geographies. Lumber is a catch-all for all of the hard costs that go into putting a building in place. Labor is the share of the costs of a new building that will result from paying people to do the work. Lending has to do with how interest rates determine how much the credit will cost to build a new building, since whether you're buying a new home as a home buyer or building a new development as a developer, you're probably going to rely on credit for parts of the process. And laws is the area that we have focused most of our research on recently because we see a lot of variation in it across different geographies within our district. And in some ways, laws can kind of touch on all of these other L's as well. So I did just a quick review of some of the zoning ordinances across North Dakota to look at parking. I picked a recent housing development from a news story that had 35 units that were a mix of 1, 2, and 3 bedroom units. And then I was just curious what the different city ordinances would say about the amount of parking you would need to put that building into operation. And the amount ranged from 48 in one city all the way up to 79 in another. And the only number that for some reason showed up in more than one city was 70. And it did kind of look like some of the spreadsheets for parking requirements were like copied and pasted into different ordinances. But it's interesting that different cities would have such different perceptions of what the parking needs for a relatively similar project might be. But this is going to influence the types of property where the apartment can be built. And as Emily explained earlier, will also influence potentially how many units actually are able to be produced on those different pieces of land that are available. So with that, I will turn it back over to Libby to wrap us up.
So I get to wrap this up by thinking about what lies ahead in terms of thinking about where the North Dakota housing supply is and how that might interplay with some of the housing affordability numbers that we've already shown you. Just yesterday, I saw a quote in looking at forecasts that said that there are two types of forecasters: those that are wrong and those that don't know that they're wrong. And so I know that I risk, stepping into this by laying out some elements of forecasts, but I'm going to get started with that by going back to something that is very safe, which is looking at where North Dakota's population has been. So just to ground us, North Dakota has seen housing growth, and in some combinations of years, North Dakota has seen some of the fastest population growth of any state in the nation, particularly during the decade from 2010 to 2020. Population does continue to inch upward, so the most recent information has the North Dakota population at just under 800,000 people, looking back to 2024. So it's late 2025 right now, probably passing that 800,000 number. Now, for context, I want to turn to the long-term population forecasts that come from the North Dakota State Data Center, which put out their population forecasts about a year ago, laying out to 2050. Now, when I'm looking at population models, I'm fond of the line that all models are wrong, some are useful. So I'm not going to say that these numbers are what's going to happen, but there are a few pieces of this that I want to emphasize. So certainly we see that ongoing population growth being forecast, but taking a step inside the numbers from the North Dakota State Data Center, one of the key quotes that I think is important for this particular conversation is what that mix of population growth is. So from a demographic sense, there are two types of population growth. One is natural growth. There are more births than deaths. There are demographic components around fertility rates or what life expectancy is. And so for most of the time periods, they are projecting some natural growth in North Dakota. But the majority of the population growth that is being forecast is the result of migration into North Dakota. So looking over this entire time period between 2020 and 2050, the North Dakota State Data Center is saying that net migration will bring in approximately 140,000 additional residents between 2020 and 2050. So thinking about those residents who are anticipated to be moving into North Dakota from Minnesota, from neighboring states, from elsewhere in the US or elsewhere in the country, the question starts to become, where are those residents going to live? And that's what brings us back into the housing conversation. So to wrap us up, there are various ways of thinking about what a housing shortage or housing undersupply would look like. And when we think about what are the symptoms, what are the cues, what are the pieces to be thinking about, economists, we work with a lot of economists, would argue that when an area is experiencing a housing shortage, we see less housing affordability, prices go up because there's that element of fewer options, supply and demand in action. We would see changes in housing composition. So Ben gave you some teaser about what different household structures might be. That might be renting a bedroom out to someone. That might be people who are sharing a housing unit because they can't afford to go out onto their own. That might be the adult children who are choosing to live at home because they can't afford other housing options in a market, in an environment of a housing shortage. And then the final piece about decreased housing mobility. And this is where people are unable to move into an environment, even if they have a job lined up, because of challenges of there not enough housing options. And this is some of the conversation that we hear more and more, particularly from employer communities, whether that is the healthcare community, whether that's the school districts, whether that's manufacturing, the range of employers who are saying, we're creating these jobs in this location and we don't have the workforce available to fill them. So in thinking about how people are looking at housing shortage or undersupply, we can look at some of the national entities that have estimated what North Dakota's housing shortage or undersupply looks like. So the American Enterprise Institute looked at a range of national estimates and calculated that housing undersupply as a percentage of the overall number of housing units. So North Dakota in gold, according to their numbers, the shortage is about 0.5% of the overall housing stock. So this is one number from that national level. And Up for Growth, which is a national advocacy organization, Emily Hamilton serves on one of their advisory boards. This is an organization that estimates that North Dakota at the statewide level has a housing undersupply of about 1,000 units in their most recent count, which is going back to the year 2022. So think back to 2022. And putting this into this longer time frame, we see that the number of units that North Dakota is short has been increasing since 2019. So in 2019, they were saying that the undersupply was much less. So there has been some increase in it. But it's not the same level. But we see some of the neighboring states that have seen significant increases in the number of units that they are undersupplied. So going back, looking at this, going from 2022's housing undersupply of 1,000 units, the question becomes what lies ahead for North Dakota in terms of housing shortage. So one key thing to keep reiterating is that these numbers are at the statewide level. And so thinking about in different locations across North Dakota, are there places where there is an excess supply of housing that is creating shortages in different locations because of the geographic dimension? So will North Dakota see those rapid increases as a result of this? Another key thing to keep emphasizing the element of unique regional trends, North Dakota across certainly all the states in our region, perhaps across the country as well, has seen the geographic dimensions of housing supply more vividly than many others, with the oil boom in western North Dakota seen a few years ago. So this is taking North Dakota and putting it into three large chunks. So Vision West area of 19 energy producing counties saw a significant population and housing growth over the 2010 to 2019 period. The largest urban areas of Fargo and Bismarck saw significant growth in that era as well. Rest of North Dakota, limited housing growth. When we look at the more recent information in the 2020 to 2024 decade, we see that most of the population and housing growth in North Dakota has been occurring in the metro areas of Fargo and Bismarck, relatively little population and housing growth in those energy producing counties, relatively little in the rest of North Dakota in those blue areas. But having put this out, I know that the Red River Choteau recently put out the number saying that their area in the Grand Forks northeastern area of the state was short by, I believe it was 4,800 units would be needed by the year 2030. We hear a lot of conversation, people talk about the need for housing in the Ellendale area because of some significant additions to the employment stock there. And so in all of this, there's a significant geographic dimension to housing supply and housing shortage. And the final piece is noting that the lowest income households face the most severe housing shortages. So this is going back to this typology I was showing earlier about low income rental households and looking at, for the number of rental households at a given income level, how many housing units are available to them. So the National Low Income Housing Coalition is measuring the housing shortages. So for our low income households, again, these are the households that are earning 80% of the area median income. In North Dakota, they're counting about 110 housing units that these households are able to afford. So in that area, there are some supply, there are options for them. Looking at very low income households, so looking at households that are earning 50% of area median income, again, we see overall alignment between the number of housing units and the number of households. For every 100 renting households, there are 102 rental units available. This is not to say that there is a good match necessarily, that the lower income households are in fact living in the lower rent units, but there is at least enough. But when we look at our extremely low rental income renting households, those who are earning no more than 30% of the area median income, here we see that for every 100 renting households, there are only 62 units that they could rent at those affordable price points. And when we look at what the impact is of those 38 units that are missing relative to those 100 renting households, we see that overall that would create a shortage of about 11,000 more homes that are necessary to meet the needs of families with very low income in North Dakota. So with all of these pieces, a few highlights in all of this. So we're seeing housing affordability falling in North Dakota, and homes are becoming unaffordable in many parts of the state. Not necessarily all, but many parts of the state. Housing growth has caught up to population growth in recent years, but as we look ahead, there are concerns that it's falling behind. Again, perhaps not in all markets, but in many markets, and concern about that slipping. And the key thing is that the scale of the housing challenges, even though we hear about housing as a challenge across the state in multiple locations, it's still at the point where it's manageable, and all of you showing up today to have this conversation is an important sign of North Dakota's commitment to addressing and taking on these housing challenges. So with this, we thank you for your time, energy, and engagement. And you will note we're moderating ourselves, which means that we are looking to you for questions and engagement. So we do have some questions that have come in on our tool.
Great. Do you want to join me at the table, or we could continue to? So thanks for your attention, everybody. So the first question we have here is, even though Bismarck and North Dakota are more affordable, transportation is costly, personal car costs monthly. What are your thoughts on this dynamic? And I'm going to do one of those things that is kind of annoying when you're in the audience sometimes, which is answer the question, but also use it as to get on a different tangent, which is to say, I think my most direct answer to this question might be that the thresholds we use, the 30% housing budget being the cost burden point, at some point you have to pick a measure, and it's not always going to be satisfying when you think about specific populations or areas that you're trying to get a sense of. So what's important is to pick something and measure it over time. So there are groups out there that I think have some really creative other ways of thinking about how family incomes change over time and how family costs change over time. And I think what's more important in some ways than the measure itself is that consistency in measuring it over time, but also the buy-in from people who you're trying to convince that the data are telling a real story. And the sort of tangent that I'll go on to is that all of these other costs are really important, but one slide that I didn't squeeze into the presentation today is about some other recent research on homelessness, which I think is one important measure of how extreme housing affordability challenges can be for individual households in a community. And what that research has shown is that if you think of all of the stories we tell about homelessness, whether it's mental health and addiction being a large driver of it, whether it's poverty rates, so not just income levels, but extremely low incomes. If you think about all of those things, which are important parts of the story of homeless individuals and addressing homelessness, the best predictor of homelessness within the largest cities in the country is not any of those things, but is simply the measure of housing affordability. So the places where the homelessness crisis has worsened, if you look at all of the data and see where the strongest relationships are, it is just that basic relationship between price and incomes. So places with higher rates of drug addiction or mental health, that sort of doesn't send as strong a signal as just the basic ability of people to afford their home. So I think that's sort of my example of thinking more expansively about how we're considering the strains on people's budgets that might be coming from the housing expenses is important. So great question. And Libby, any thoughts?
Thank you, Ben. So a number of years ago, there was a think tank / advocacy organization out of Chicago that developed what they called the Housing plus Transportation Costs Index. Now, it was an excellent example of what Ben was referring to, because they did this once. They did not update it, they did not maintain it, they did not create any sort of a time series of the information, but it was a useful, at least one-time opportunity of looking at how housing and transportation costs are in interplay in terms of what is affordable to households. I do spend a lot of time in some of the larger space around urban development, and I would go back to some of the conversation from our morning panel in talking about what Norm called the Homer Simpson neighborhoods. And so using that metaphor of the Homer Simpson neighborhoods where an individual or the child, the adult, the senior who is not able to drive has the opportunity to walk to an array of resources. And so in many places, it's not realistic for a household to have no cars necessarily, but to think about what are the opportunities for households to have fewer vehicles, creating more opportunities about where they live and more opportunities for walkable neighborhoods. So this goes back to that overall interplay between what our local form is, whether that is in an area like Bismarck or in a small town that still has the development patterns of when neighborhoods were walkable because they are small towns.
Thanks, Libby. And our other question, I think I'm reading it as a question about condos, but I might be misinterpreting it. So this is a question about the unit type distribution you showed and how there's not really a lot of ownership opportunities that aren't in the single family realm. So is there a disconnect between ownership and density, and what might be some of the problems that could create? And maybe I'll add, why don't we maybe see more dense ownership opportunities?
So in thinking about this question about the ownership opportunities outside of single family detached, we do see across the country more development in the certainly in townhome development, and I'm increasingly hearing about twin home development, but thinking more broadly about what are the types of attached housing that create ownership opportunities. In some of the elements of condominiums, there can be some legal issues, there can be some liability issues that discourage some of that construction, as well as thinking about what the ongoing costs are for homeownership associations, the HOA increasing costs in that way. But when we think about some of the different types of gentle density, there are many opportunities that are beginning to pop up across the country to create townhomes, to create owner-occupied duplexes, to create twin homes, townhomes. And so as the question came in, we haven't necessarily, certainly across the country and in North Dakota, been doing as much of that as we could, but that doesn't mean we can't, looking forward, as we move toward more smaller households, and with that, more smaller housing units.
The only other piece I might add is that I think Norm had a good way of thinking about how housing finance can often work. And so when we're thinking about single family units or kind of your typical multifamily properties, there's a lot of institutions that are set up pretty well and are in a lot of cases even oversubscribed in terms of how much money they can put out to finance those kinds of projects, whereas some of the less typical approaches to ownership might require actors who are willing to do that extra work to figure out how the financing works and what the actual risks might be in taking that kind of endeavor. And with that, we are out of questions from the audience. Thank you for, out of time, I should say. So thank you for your attention, and we'll be back soon with our second panel of the day. Second panel of the day, so I'll invite our panelists to join me up here on stage. So earlier this morning, we heard from people from around the country who were talking about their perspective on different approaches to supporting housing. Oh.
Well, that's an entrance. Pardon me.
Sorry.
The stair caught me.
It's a very tricky step.
It's a tricky step up here.
Are you okay?
I'm fine, yeah. It's a tricky
Yeah.
step. It's high.
It's the last one is very tall.
It's a tricky step, yeah.
So earlier today, we heard from folks from around the country telling us about how they can support, or their ideas on supporting housing affordability in all kinds of communities. And for this panel, we're hearing from people who are from or have done a lot of work in North Dakota. So Janelle Mose is with the AARP and has some insights into how our particular community might have different housing needs than the overall population, and has also had a lot of great housing conversations in North Dakota, including participation in the housing initiative that took place last year. Dan Madler leads a producer of he's overseen the production of almost 2,000 units of affordable housing in the state and surrounding states. Lorna Fogg has been involved in efforts to finance housing in Indian country and native nations across the country, and in some cases has been an innovator in bringing some new financing tools to some of those projects. And Brent Sanford has seen the perspective on housing affordability crunches from being the mayor of a rapidly growing small town to serving as lieutenant governor, and now is a leader in higher education in the state. So I'll turn it to Janelle first, and as before, please don't be shy about throwing questions to the panel via the Pigeonhole link that's on the screen, or if your phone can't kind of reach that far, also on the agendas in front of you. So thanks.
Well, thanks, Ben. It was like I did my own little introduction for the need for, accessibility and, safe steps for folks that are 50 and older, right? So that, you're welcome. So how many of you think about AARP? You probably don't think of us in the housing space. You probably think of us right now for open enrollment, or you probably come up to one of our AARP staff and say, if I get another mailing from you, from AARP, I'm not that old yet, why are you sending me all that mail? Yes, those are things that we do, but you might be surprised at the other things that AARP does. So I'm Janelle Mose, I'm the advocacy director, so most of my time I spend time at the Capitol doing state and local and federal advocacy, but AARP is a nonprofit, nonpartisan organization. We've got 38 million members across the country. There's 83,000 members in North Dakota. And like I said, you might be surprised what AARP does. And housing is the space. And I met Libby and Ben, that was just last year, wasn't it, Ben? During the governor's housing task force. But we had some really important conversation about why AARP is at the table and why housing is important to folks, not just 50 and older, but this is really an impacting issue for everybody across the state. A little history on AARP for those of you that don't know the history of AARP. So Dr. Ethel Percy-Andrus it really is a core issue to why AARP was formed. She was, out visiting one of her former colleagues who was a former teacher. She found them living in a chicken coop. And so this was really what sparked her desire to say, nobody living on a meager income should have to live in a chicken coop after spending their life dedicating their time and service to their community. And so it really started, what was the importance and why AARP was started. So that's a little bit of history of AARP. I won't cover this piece in particular, but I think what's important, and I think what we've talked about today, is that the housing needs now are going to be different than in the future. And our population is going to look different than it does now and into the future. And what we know is that folks 65 and older, it's increasing, so 118,853 in 2020. That's increased to 147,528 in 2025. So 24% increase in that short amount of time. And what we know is our population's continuing to age. And that population, the demand for the housing that they need in the future is not here right now. And will that continue to keep up with the population growth? I think about two of our volunteers that live in Grand Forks. They had a large 3,000 square foot house. It took them well over a year, almost 18 months, to find something to downsize to. There was nothing available to them. And I think that's the important part that we bring to this conversation. It's about choice. What are the housing choices that folks 50 and older are looking for now and into the future? And it's really central to all of us. I have, conversations with people all the time about what is the type and location of a house that you're looking for. And most adults now, they want to stay in their home. They want to stay in their community. So how can we create the conversations that allow for those choices that we know that's where folks want to stay? And really, AARP's policies really focus on promoting those affordable housing options and also working with that private-public partnership. So how can we create conversations? And by no means is AARP an expert when it comes to housing, but we have access to resources, technical advisors that can really open up doors to local communities. And I see a lot of faces in the room that we've worked with, that we've allowed, we brought in our technical advisors that help meet the needs of your particular community. And that's why we really drive this forward. And so just a couple of things that the survey that was done in 2024, so 51% of people 50 and older think that they'll have to move to allow them to age independently. 75% again want to stay in their homes. I think if you've had conversations with your neighbors, your parents, most people want to stay in that community they live now, but most also expect that they're going to have to relocate to find the services that they need. So that's something that, has to enter into the conversation, and where we've really, tried to create space for that, again, is this middle housing piece. And I think you've heard that from other people on stage today talk about middle housing. And that's where we really have kind of dipped our toe in the other housing spaces. What other options could be available besides that single family home or that large scale apartment building? How can we create, the availability of duplexes, triplexes, cottage style homes? I can't remember what the guy from earlier called the ADUs, but it was, how do you create places that people want to downsize to? Then that frees up space for other people that want to have those larger single family homes. So I think we've talked, several folks have already talked about this. So looking at missing middle housing used to exist, and it still does exist in your communities. You just might not see it. You might not look for it. And I think that's where we've created space to have conversations that it used to exist and it can now coexist. But we're so used to seeing large single family developments, or my mom now lives in the Earl apartments. They're way down South Bismarck, large scale apartment buildings. So where can you find that middle conversation about these things do exist? And they can blend into your current neighborhoods, and they can really provide that option that folks are looking for, not just in Grand Forks, but we work with folks in Milner. They're looking for the same thing. I just had a conversation with folks at my table about rugby. What do they need in rugby, and how can we create that space for that conversation? So why do we support this? I think it meets the housing need. It was just one couple that we heard from in Grand Forks that was looking at downsizing, but it meets the needs, not just of people 50 and older, 65 and older, but other folks are looking to get into the market. And how are those houses available to them? Low-cost housing options, really preserves neighborhoods, blends things into those neighborhoods. It's a good use of land. I think you've seen a lot of those examples today about big family, big lots. How can you use those lots a little bit more efficiently? How can you create more opportunities for people to live in those neighborhoods they're looking for? Places to walk, places to, get a cup of coffee, places to get groceries. People want to have those neighborhoods they have connections to. They don't want to just live there, but they want to be able to walk and get the resources and things that they need within that proximity. Benefits we've talked about already. This is the part that I wanted to highlight, and this is the part that Ben and I talked about during our part of the governor's task force, but conversations we've had after that. So again, we have access to national, technical advisors that come into local communities and have conversations to meet their needs. So we've worked with Bismarck and Mandan and Milner, and but we want to create opportunities. We don't want to come in and say we can solve all of your problems, right? We don't have the answers for you, but we can open doors and make sure that you have the resources that you need to do it. So on the smaller scale there, that is in Milner. So we worked with the city of Milner, and they said, we have this open lot, and we want to show the commission that there are opportunities to use this lot in different ways. So we had a test fit model that they looked, and they created different scale. So what could you do with a triplex or cottage style homes? And we gave them options to see that you could use this very large unit and make it into a lot of different options for them to consider. Up in the corner there, that was one of the missing middle housing design tours. So we did one in Bismarck and in West Fargo. And so it's designed, working with our technical advisor, to look at a neighborhood in Bismarck. We make it walkable, a mile and a half. We walk through the community and look at how some of these did exist in the past and how they blend within and most people didn't even know. Well, I didn't know that was a duplex, or I didn't know that was a fourplex. So we want to show people that these things do exist and can, again, coexist into the future. And then the other project that we're really, we did this last year, we did a missing middle design competition. So we had planners and developers. We had a professional category, so you can go in. We had a city lot that they could go in and design, tell us what you would put on this city lot. And so the design competition was, again, making sure they were accessible, designed for 50 and older. But we also had a student design competition with NDSU architecture program. So it allowed the conversation to say, these things do exist. And then we did award the winner, and we had the projects at our community celebration. There were people coming up to the winners that were there, but also to us as staff, and saying, how can I get one of these? Who's building these houses? This is what I'm looking for, but I don't see it in my own community. So just creating that space that we could say, think about what is possible, but this is what people are looking for. And it really opened the dialogue between people that are attending our meetings, and then we can connect them with local leaders to say, if you're having meetings about what do you want to do with this open lot, how can we create that space to have the conversation? These are other options, and I'll turn it over to the other panelists. But these are other options in terms of housing. We do have tremendous resources available. They're all free. They're all downloadable. You can go to the website there. One's giving you different examples of missing middle housing. We also have guides to local and state regulations, like what changes can you make to promote missing middle housing. The website's there, but also the QR code, you can go there and you can download everything for free. So I will turn it over to the other panelists and go from there.
Okay, good afternoon, everybody. I'm Dan Madler, and kind of preparing for today's session here and visiting with Ben. He thought it would be a good idea to give the audience and everybody here today a little bit, some information about the work that Beyond Shelter does, and a little bit about myself and the perspective that'll kind of lead into the panel discussion, which I'm looking forward to. So with that, I'm going to go ahead and just kind of briefly talk a little bit high level about the work that Beyond Shelter does. So a little bit about Beyond Shelter, essentially our organizational overview. We're essentially a mission-driven North Dakota nonprofit developer of affordable housing. We're also a certified housing development organization, or called CHODO. And in the housing world, that has a lot of things that come with it as it relates to a funding source, the home funds. And it's an important tool that we utilize. And over the past 26 years, we've been helping communities meet their affordable housing needs, communities mostly here in North Dakota, but we also have done some work in South Dakota and Minnesota as well. Our expertise, where we thrive, the team BSI, we have expertise in senior housing, permanent supportive housing, family housing, and then you also look at construction types, new construction, rehabilitation and preservation, and also downtown revitalization. Beyond Shelters, why? Why do we exist? You can see this photo here, it just pretty much tells the story if you ask me. Where everyone, we believe, deserves quality, affordable place to call home. And housing truly does matter. It's foundational to all the positive life outcomes. And when you kind of think about positive life outcomes, you know, your home, housing, it's connected to your health, your education, your family, employment, childcare, transportation, wealth creation, single family homes, etc., public safety. And when you look at all of those things, without housing, nothing else really works. So those are all interconnected and interrelated. And so kind of maybe just to step back a little bit and think about those two questions that are up there. Where would you be personally today if you did not have a home? And if you have a family, how would life be different for your family if you did not have a home? And but when you think about it and take some time from the busyness of day-to-day life and you really truly think about it, I think everybody kind of has an answer internally. And this kind of relates to the bottom line is I would just say housing truly does matter. And so what does a Beyond Shelter do? What do we bring to the table? 26 years of experience and impact. You know, basically we've been delivering affordable housing for the past 26 years and financing, some of our financing achievements. We have secured over $250 million in funds to fund approximately 54 housing developments that would produce and have produced more than 1,680 affordable homes. We have comprehensive expertise. Expertise includes project structuring, oversight, financing, leasing, and compliance. There's a lot of moving parts when you're looking at housing and housing development. Like I said earlier, we're a regional housing developer, but most of our impact has been in the state of North Dakota. And some of our development footprint here in North Dakota has been in the communities of Bismarck, Burlington, Dickinson, Fargo, Grand Forks, Jamestown, Minot, West Fargo. Currently working on some things in the Devil's Lake area as well. We've done some work in South Dakota and in Minnesota, Fergus Falls and Moorhead. Funding sources. Boy, this is where you got to get really creative. No one source is going to do what you need to do to provide affordable housing to the market. And so we utilize a very diverse funding sources and multiple sources to do the work that we do that go into our housing developments. And there you can see just a variety. You have federal sources, you have state sources, you have private foundation sources, a whole variety that is needed to basically bring the affordability down. When you talk about affordable housing, how do you get there? A 2x4 costs me the same as anybody else or any affordable housing developer. And so it's all about how do you finance it to get true affordability. And you utilize various sources to get it done, which sometimes causes brain damage, I would say. Absolutely. And I'm still ready for some more of that, I guess. And so a little bit about myself. My professional background, like Ben said and introduced, I'm the Chief Executive Officer of Beyond Shelter, which is based there in Fargo, but our primary market is the state of North Dakota. I was the first employee of Beyond Shelter. I joined Beyond Shelter back in 2003. I have 32 plus years of experience in affordable housing industry, and I personally have participated in the development of over 1,650 affordable homes. Which really truly has a deep meaning for myself. personal statement, a little bit about that. I think today to be successful, everybody has their niche or their skill or their ability where they thrive. And by nature, I've always been a problem solver, and I'm driven by challenges. And so when it comes to developing affordable housing, hey, there's big challenges to solve there. And that kind of creates a passion. Essentially, Beyond Shelter is mission driven. Which basically makes life better for others by giving them a place to call home. And so that really brings some meaning to the work that we do at Beyond Shelter. And so to kind of conclude, looking ahead for today's panel, affordable housing, as I would say, is foundational to thriving communities. Every community has a need or a demand, and it provides that foundation. And I'll build on that later. Beyond Shelter is committed. Everything we do is in partnership and relationship, and so we're committed to partnering with others to meet the affordable housing needs of communities across the state. And essentially, it's going back to partnering together. You know, we're working on creating solutions that essentially have a lasting impact. Housing is a long-term asset. It's not short-term vision, it's long-term. And with that, I'd like to thank you for the time and the opportunity and allowing me to share a little bit about the work that Beyond Shelter does and who I am and my perspective. And I look forward to continuing the discussion with the panel.
Hi there. I don't have any slides, so you just get to look at this up here. My name is Lorna Fogg, and I work for a company called RT Hawk Housing. It's based in North Dakota. It's a tribal organization. It's owned by Wilbur Red Tomahawk. He's a member of the Standing Rock Sioux tribe. I live in Florida, and our work is done all over the country. Most recently in North Dakota, we worked on a project that's 20 units for veterans. It's a veteran supportive housing project, has VASH vouchers for rental subsidy. It was done with low-income housing tax credits as well as affordable housing program grant funds. And that project is getting ready to, it's just completed construction, getting ready to have its grand opening next week. And so I've been doing this since 1995 and started off with a tax credit investor. And through there, I met some people that started working with tribes, and they wanted to make it kind of mainstream. How do we get investments into the tribes like we have with other communities? And so then I started working for another company where we did consulting, full-time consulting to bring programs out to tribes to show them how we could develop housing. And the primary funding source for affordable housing is, and still has been and still is, the low-income housing tax credit program. And so worked on capacity building and bringing that information to the tribes. We've probably done about 170 projects with tribes all over the country. The first few that we did was always just kind of, what do we want to do? We want to build houses, we want to rehab houses, and it was just a matter of getting units on the ground. Since that time, we've learned that it's not just about houses, it's about kind of the community, the shelter. It's not as important for tribes to be in that walkable type area, especially in the past. They weren't really thinking along those lines. They just were thinking that we've got people that don't have shelter, that are living together, multi-generational in the same households, and we just need houses. And so we kind of went that way for a long time. And more recently, what we're seeing though is that we're moving to mixed income developments, mixed use developments, supportive housing projects, tax credits to home ownership, and all sorts of things like that. So the financing is very similar. We are not just doing housing tax credits and having a little gap by the tribe anymore. I think we have a project in New Mexico where we have about 15 different sources of financing. And with all those different sources of financing, we have different compliance requirements as well. We have another side of our company that works, I do the development, and we have the other side that works on the compliance and management and best practices there. And the supportive housing side of things, that's interesting because a lot of the people that are living in the community, they are related to the other people, right? So you've got somebody that gets out of prison, they don't know where to go, or somebody that's got addiction problems and they're homeless and they don't know where to go. So they end up moving in with grandma, and grandma's renting a home that's got all these compliance requirements, and grandma's out of compliance with her lease, so grandma gets evicted along with the homeless person. You've created another homeless person. So we've taken that strategy of building these supportive housing projects in the Native communities to where we do have returning felons, and we do have people that have substance abuse problems or mental illness, but we are building them near services and hoping, if we can't help the people that need the services right then and there, that we're helping the families, the extended families, making them more secure in their units, as well as the next generation. A lot of these people come with children, and so trying to keep those children housed and getting them to be not the next generation of homeless, but the next generation of productive members of society, trying to do that. That's one other area that we're working on. And then the home ownership aspect. Home ownership is very expensive. So if you're using a traditional mortgage, you pay and you pay and you pay. 30 years later, you've bought your house. With the 15-year tax credit to home ownership program, the majority of the costs are being provided by others, either through grants or tax credits. And then by the time you get to that 15-year, we're working with the tribal members to build financial capacity, budgeting, home maintenance, those types of things. And then ideally in that 15th year, not everybody will be ready to be a homeowner. Some people will still need some time. They're not capable of maybe paying the insurance bill or those other things that come with home ownership. They're better off being a renter. But there will be many that will have gone through the program and that they will become homeowners after 15 years, and that home ownership payment is going to be a whole lot less. Oftentimes we're finding home ownership, the mortgages and best practices in tribal communities are going to be like $30,000 after you're 15, and you could just go take out a small loan for that, or the tribe itself will have a loan program to be able to help those tribal members. We have a whole lot of other stuff. Costs on the reservations are very expensive because we do have, oftentimes with the sources of funding we're using, has prevailing wage rates. Sometimes we have to handle the BABA, if you've heard of that, the Buy America, Build America programs. Oftentimes we're in very rural locations, so we have a lack of contractors that are willing to work on the reservations, so costs are really, really high. Sometimes the funding programs that we work with don't recognize that or don't understand it if they haven't dealt with the tribal project before, and we have to kind of justify and let them know, hey, this is how much it costs to build the house, and it doesn't make any sense. Because you might say, what was it, $350,000? Somebody mentioned that's how much a single-family home costs. Well, sometimes we're seeing $500,000 on the reservations, and it's not a mansion or anything. It's just an affordable home, a modest, affordable home. But because of the lack of infrastructure, because of how far out they're located, maybe concrete you can't find for several hours, it just increases the costs. So we are going to a lot of modular and manufactured housing on the single family side as well as the multifamily side. And then the interesting thing about the manufacturing, you kind of think of, you just go down to a lot and you see these houses that you can buy. But there's a whole lot more to it now, where you can go to the factory and you can, sometimes they're delivered in these pods, and then they build them, and you have to construct the roof and the siding and all of that stuff on site. So it's kind of part stick built, part manufactured. But there's a lot of interesting concepts out there, and we're seeing all of those things to help with the affordability on the reservations. And I think one of our most recent projects, we did a mixed income, where we did market rate as well as affordable, because they wanted to make sure, again, with some of the themes here, we don't have anywhere to put the school teachers and the police and all of those things, and it's hard to attract people when there's no housing. So being able to do some of that mixed income and have a market rate component to our project is allowing us to try and bring in those essential workers to the community. And I could just kind of go on and on. I don't have any slides, but I'm gonna call it. And I can't even believe I've been up here 9 minutes. I thought it was gonna be like 2. So I'm gonna have a seat. Thank you.
Ben, I'm glad you have the 1 minute marker to tell me when it's 1 minute. I don't have slides either, so I'm not Dan Madler. I'm Brent Sanford. I was making some notes on my phone as we're going along, and I could go way more than 10 minutes, but currently Commissioner of Higher Ed for the state, last job Lieutenant Governor for the state, and we must not have done enough work in this because the last 2 governors have had task forces on housing, and I'm glad there's another one. But in all seriousness, my job before that was mayor of Watford City, and we had a little thing called an oil boom happen there, and so I've got some history and some successes there. Jennifer Henderson's in the back, and she knows I'll talk about HIF at some point, but I'm a big fan, big proponent of that. So what happened in Watford City was a little town in west North Dakota that was historically around 1,500 to 2,000 people. We moved home 20 years ago, and there were around 1,400 people. And what was left for housing stock were some really crappy apartment buildings, and no offense if anyone's here that owns them. And then there were houses that were built in either 1914-ish, when the city sprung from the end of the railroad, or else the 1960s. And I asked my dad, why do these houses all look the same on the outside of town? He said, well, the federal government had money in the 60s and HUD built those. Okay, so we don't have money now or something? And so there were no houses built on the outside of that ring 40 years later. And my parents had one of those houses. My in-laws had one of those houses in Williston, 45 miles north, also in the oil boom. My in-laws are still in that house. My mom is still in that house. So talk about the need for middle housing. I get it. These are 80-plus age adults with a lot of time in Bismarck for healthcare needs, and that housing is not adequate to have a 2,000, 2,500 square foot house that you've had for 50 years. And there's nothing in between. And one of the slides said, they're willing to move, but stay in the community. I actually had talked my mom into moving to Bismarck, into one of the nicer assisted livings, and she had health concerns. She lived here for 2 years, and then she said, I've got to move home. I miss my friends. Back into this house again, this full-size house. And my sister has to live with her there. There's nothing in a little town like Watford City for that middle housing yet. So I'll walk through that. There's a great video out that just came out on YouTube from my town, Watford City. Why do people move here? It's a very moving video. I told Sandy last night, guess what's not in there? Shots of housing. She goes, that's not what you'd show in a promo video like that. You show the people. And I'm like, okay, but the thing is there's nothing to show. After I was on city council for 10 years. We had the oil boom, basically went from 2010 to 2015. All kinds of money came in. Single family housing did not even get started during that time. With the population going from 1,500 to 6,700 officially by the census. And it's leveling off in that 7,500 range. So the population went up 500x, and single family housing didn't catch up. It's one of those ratios that you don't even want to know. What's the real ratio of apartments to single family in that town is somewhere around 5 to 1. In Williston, it's more like 12,000 to 10,000, and they think we've got way too many apartments, not enough single family. In Watford City, it's like 5 to 1 rentals to single family. And the city planner at the time, Kurt Moen, was a Watford City alum like myself. He'd been in Las Vegas developing, and he told me, you can't do everything and bulldog it through like you do on most of the other stuff. Mayor, this single family housing thing takes buyers, it takes banks, it takes builders, developers. It takes a whole lot of people willing to take a risk, and it'll come at its own pace. And so you go there today, there's still that middle housing really didn't take off much. There were some attempts to build things that look like middle housing, but then it was for workforce housing. And guess what? There's still contractors and oil field employees living in that stuff, and they look like it'd be senior housing, but it's still, the market still is using it for what it was built for. So I moved home in 2005, and my banker today is still from there, and she won an award statewide for these it was a fourplex housing development. There were 4 fourplexes built, and they said, we're gonna get 16 of the grandmas out of their houses and put them in these units, and then there will be 16 houses available for people that want to move here. And that was in 2005, and no other housing built like that even after that point, because it wasn't where the money was. Okay, so those are still there, but what really happened was the market took off. And so in 2011 to 2015, rents were $4,000 a month for an apartment, $12,000 for a house, because you could run trucking crews in half the first 12 hours, have 12 truckers, second half of the day 12 truckers, and make sure that those 4 bedrooms had 3 beds in each of them pay $1,000 a month. You're making a lot of money on those houses at the time. But $4,000 a month rent for apartments, the apartment builders came from Manhattan, from all over the place to build apartments. And so one year in 2014, 1,000 units went in one development that was out by the cemetery, that was on next to the golf course. It was a 160-acre field that was a mile long and only a quarter mile wide, and 1,000 units, all apartments in that area in 2014. And the entire number of units in the town before that was like 500, including all the single-family houses. So this is what the market will do, and they're all $4,000 a month. So where do the cops and teachers and social workers live? And the school had gone from 500 kids to 1,100, hiring 20 to 30 teachers a year. You had to hire Watford City grads to live in their parents' basement coming out of college. Otherwise, there was no way. So at the time, Jennifer's boss, Jolene Klein, and Governor Dalrymple worked with communities like ourselves and came up with Housing Incentive Fund to put in a wedge in the middle of the financing stacks that was a forgivable loan to make sure that the rents stay at what we say they're going to be, and it was about $1,100 a month, and it worked. And so we had nonprofit developers and some for-profit developers start building units, and HIF worked. It kept the rents where they needed to be. Funny thing about being in an oil area is that 2014 OPEC decided to crash the price of oil. And so those $4,000 a month units ended up being $800. And so our cops and deputies and social workers and teachers went and got apartments out there and left the HIF units. And I would tell Jolene, no, we can't bring our rent down. It still has to be $1,100. But the oil came roaring back, and all those renters came back to the HIF units. And so it worked its way out. But it actually worked to hold that rent in a market where it was $4,000 a month. Let's see, and other things that were happening at the time. One of the local oil and gas operators, One Oak, decided we're going to just start throwing $50,000 per employee at this. If you build a single-family house in town, you get $50,000. And this program has stayed in and out, on and off for 15 years. Not just them, but the county went to it as well. Number of houses built under this in its entirety, probably not 20. But I would say to the local officials, I don't think you can do that. That's not sustainable to do $50,000 per taxpayer. That's like, 50 years to get it back from each one of them. And every other taxpayer is going to want that $50,000. But they did it, and it's, again, wasn't even enough. The construction costs in a little town like that, that far away from even a market like Bismarck, they're saying now the houses that were built under some of these programs are $700,000 to $800,000 for starter homes for the 2,500 square foot house. And so then they can't finance them. So I actually, in my in-between lieutenant governor and getting into higher ed, was working on a couple different construction consulting projects, and this one didn't pay very well, but it was a really good idea, we thought. But it was to actually bring in, first was prefab offerings, and so can we actually have the local contractors agree that they can't provide what this housing market needs? But maybe if there's lots available, you could have them put the foundations into a spec and get orders coming from the pre-builders. And that sounds easier than what it actually is, because then if the markets are brisk enough in between here and where the pre-builders are at, they don't truck them all the way to Watford City. So that hasn't really taken off, ironically. And another one was actually concrete 3D printing. And so if you watch videos on 3D printing houses, it's quick. You have the thing up in a few days and then let it cure for 30 days. And they'll look like a stucco home, and it's less money than a steel house. You're starting to see the steel, like a steel building made into houses. You're starting to see that. Even in that area, get the construction materials in easier than wood and traditional materials, but those are expensive. The concrete house is actually cheaper than that. But we ran into who would own the printer, who's going to own the ballast that it sits on. Again, is it the housing authority has to do all of this with volunteers? Do they coordinate the digging of the holes and the building of the foundation? And then again, who's got the 3D printer? So anyway, trying to look at innovative ways. 0 of them have been built, and I'm looking at this as I feel it's still a failure of being on the city council, being a mayor for that long, for 10 years with that much money rolling the way, with that much of an economy, that single family housing still didn't take off in that area, and I don't know what the answer is today. In the middle housing, I learned a new word today with middle housing. Middle housing is another one that it has not taken off. It was even people that are in that age for middle housing in Watford are saying, should I put money into this? Should we build those one level nice units you see in Bismarck? And I'm saying, yes, please do. It just has to happen. I know I have a mom that needs it, a dad that needs it, and in-laws that need it. And so, that's where the state of things are today. And I would be an advocate for HIF 3.0, and I always am. And it would need more money than the 20 or 25 million. It's going to need a lot of money to put that gap in the middle of the stack. And then you still have to have lenders and builders that want to actually do this in these areas where the market needs it. And with that, I'll sit down and we'll take questions. Thank you.
Thank you all for those presentations and for taking the time to share your experience and wisdom with us today. So I'm going to start with a question of my own, and then we'll turn to some of the online questions. So you've all been in positions where you're talking to people across a wide range of communities in the state, and in some cases even the country. When someone comes to you and is at a stage where they feel like they're starting to grasp that there's a housing affordability challenge in their area, how do you help them dig in to understand what those needs actually are? So moving from a place of acknowledgement to understanding and helping them understand the path forward to maybe start addressing some of those challenges. Other way, I think the switch.
Okay, I can quickly answer that question from a really high level. Whenever interacting with a new community or a community that has question, you can kind of look at, I would say every community probably in the state of North Dakota has a need for affordable housing. And when I look at affordable housing, it's not a short-term investment, it's a long-term investment. And really you have to look at some of the data, and the data is basically what is the true demand. You may have a need for 12 units or 24 units or 100 units, but you have to look at the demographic and see this is a long-term investment. You can't look at years 1 through 5. You have to look long-term. What is the true demand? Meaning demand, is there enough demand to ensure there's occupancy, to ensure that there's financial viability? So try to get them kind of thinking from that perspective, and that kind of helps them kind of whittle down to what they really need and what they're looking to do, and then that kind of drives the conversation forward to a solution, hopefully.
I'll go. I basically ask a lot of questions after that point, just from being there. And again, like Dan is saying, you have to get an assessment of what they're dialing in, what they're looking for, and then start to have an idea of what do they have for potential local interest, local partners. I mean, if you don't have if you don't have local officials that are interested in this, if you don't have local banks interested in this, it's going to be hard, because a lot of people can identify this problem. But then the solutions for this takes more than just private sector builders. What it seems like what's happened with some of the communities, and even in the oil patches, that the private sector builders will come in and build what they want as well. But is it in this middle housing? Is it in the areas that you need? Not necessarily. So I, maybe being in public leadership at economic development and on city councils, I know how important that is, I guess. But try to assess what the local leadership is looking towards for solutions.
And for tribal housing, there's just a need out there. There's just a need. So it's not really going out and saying, what's your need? It's that, what do we want to start with? Because I always say, put together a wish list, and there's probably 15 projects on your list, and then determine a timeline for each one. And you can certainly work on more than one at one time, but the one that needs the infrastructure coming might be an infrastructure project while we're working on the current rehab project, because that's draining your budget for maintenance costs. So, and then a new construction housing project comes after the infrastructure project. So it's not really trying to talk them into doing stuff. It's just trying to manage their timelines as well as the funding sources that are available.
The only other thing I would add is that, often we would create time and space for people to have conversations, making sure that the builders and the developers were all in the room. And even on some of these missing middle housing tours, you would see conversations that would happen just on their own, and they would be like, well, I don't do this, but you do this, so how can we bridge our ideas together? So I think even just, I know people are tired of meetings, but I think creating a space where you can envision what could be, and offering those resources to do that. I think not assuming that every community is in the same place, and that I don't want to come in with a preconceived notion that missing middle housing is going to fix every problem in every community. I think allowing communities to subscribe, like what's going to work here is in Grand Forks isn't going to be the same that's going to be Bismarck. And so how then we can provide those resources that allow them to pull apart whatever they're working with, on whether it's a zoning code or if it's we want to make sure that we're connecting those resources with what's the community wants and needs. So
Thanks, and that's a great segue into one of our online or submitted questions, which is, say a community does come with a wish list, and we've heard about the number of levels of financing and grants that need to go into supporting a lot of housing. How does the structure of a lot of those resources limit what might be able to be achieved with that wish list? So in other words, Lorna, you, for example, mentioned the increased costs in building in rural areas or on reservations. Are there other ways that the tools that are out there might not yet accommodate some of the new construction techniques or other wish list items that we heard about so far today?
Well, I don't know if I'm exactly answering your question here, but sometimes we have what we'd like to do, and then sometimes it's what we can do, right? And the putting a lot of these programs together brings in the funding, and oftentimes these programs are for lower income people, but then they also have developer fees that come off of them, and if you reinvest those developer fees into another project, that could be for down payment assistance, that could be for non-restricted housing units, and that's kind of how we try and say that even though we're really focused on the lower income groups, by doing this mixed income, or by doing the lower income and generating those developer fees and putting those into something that's non-restricted could be helpful. I don't know if that answered your question.
I can kind of build on that. So I kind of briefly touched about, there's federal, state, local resources, and kind of maybe tying on to what Brent was saying, as far as I would say basically political will is needed. Political will from the city, the county, the school district, and others, the city administration, planning, et cetera, is all needed. But when you're looking at strictly the financing and or potential sources, The federal doesn't get it done here in North Dakota. Essentially, North Dakota gets, we're minimum allocation state, approximately round up or down, 3 million of low-income housing tax credits. Now it's about 4 million. You get about 3 million of CDBG, you get about 3 million of housing trust fund, and you get about 3 million a home. So that's the asset or the federal resources that you have. And then you have this very powerful state investment, which I agree needs to be more, the housing incentive fund. That works very well with the federal. So then it kind of goes down to, that still isn't going to get done. What locally do you have? What resources available do you have that you can bring to the table?
Yeah, I can tell you, Western North Dakota, it's only what they can bring locally at this point. And so, and even at 50,000 per house, it's not making a difference. And so, and then if there's no help on the rate, then with what rates are at today, even if the banks are willing to do in-house financing, which they are in a lot of those communities, that rate still is kicking it up to where there's no way it's affordable. And so yeah, there's a huge gap is the point, I guess. But they're looking at now of if they can put their own loan portfolios together with their own money from county government, and that just doesn't seem to fly. That's something where it's not really their line of business. You get a lot of concern from residents that have been there their whole lives that really, how much of that are you putting at risk? And if it's a subordinated debt that's in the middle of a mortgage of a house that costs too much to build, it could be all at risk. And so they don't seem that like that as legs either. So yeah, there's a big gap in availability of funding, even if the political will's there, even if some local dollars are there.
So I feel like we've heard a lot about the Housing Incentive Fund over the course of the day, and it's something I also hear about on almost every conversation about housing in the state. Maybe it's worth taking a minute to talk about what exactly has made that an effective program in your opinions.
Quickly, for me, it's the flexibility of not having those federal attachments and federal rules. And it was at the beginning, it was the first iteration was that it was for 1 or 2 bedroom apartments and $1,100 max, and it had to be government employees. And then the next legislative session, they added healthcare employees. And so I mean, it was just, that was the beginning of it. And then after the oil boom started to die down, then it's been used. I'm sure Dan used a lot of it. I mean, I know I can think of a couple different projects, one in Grand Forks, one in Bismarck, that end up for those that are experiencing homelessness, and HIF was a big part of the stack of financing projects like that. And I know Kurt Kruin, when he was a senator out of Grand Forks, was pushing for more and more dollars, saying this is something we can do on our own. And it's the point being, and I'm preaching this even now in my current job, if we can't build dorms in a lot of the smaller communities, and I'm saying HIF worked really well by putting a wedge right in the middle of that financing stack. There's equity coming from somewhere. There's somebody that'll borrow some, however much on the top, but it's this in between. It's the gap in between that HIF helped. If use a dorm in Mayville for instance, if it's something that costs $12 million to build, and it makes sense for debt service for $4 million, and Mayville State can put in $4 million, then what in the world do you do in the middle with that well, you just don't do it. But if Housing Incentive Fund can come in and be part of that stack, you don't have to try to appropriate $12 million from the legislature. It's a lesser amount. It's the gap. And so the beauty of it was a very flexible gap, and it was as a forgivable loan. I don't know how many had to pay it because they violated. None. Jennifer's going like this. But it was pretty strict, I can tell you from experience, very strict on keeping the rents where it was, and a lot of oversight that the rents were what you were saying that they were. And so then it becomes equity. But legislators like forgivable loans because there is a chance to get it back if they're not doing what they say they're going to do.
Yeah, so HIF, Housing Incentive Fund, very powerful. And I think that the power comes in from a couple different ways. And like Brent was saying, it's very nimble. And honestly, when I look at development and some of the developments that Beyond Shelter worked with, not only with ourselves, but also we partner with others. You're working on a $15 million development, let's say. The easy part, and it's not easy, but it's easier to basically assemble $14 million, but you can't get to the closing table unless you have that last $1 million. So essentially that's that gap filler that Brent was talking about. it's been very helpful filling the gap in the economic conditions that we've had ever since HIF has been basically in existence. It's very strategic, and I would say it's also proven to have a return on investment. You know, every dollar that HIF has been invested into long-term assets and housing in the communities across the state, there is a proven return on investment, and North Dakota Housing has all that data on their website, and they show that. But I have two real examples just here in Bismarck on two developments that we're working on that utilized HIF, and we're working on in partnership with the Burley County Housing Authority. One is a new construction project, and the other is acquisition rehab. But under the new construction project, it's called Dakota 2. It's the addition of 34 new units here in Bismarck. 14 of those units will serve workforce family housing, and 20 will be limited and are restricted to senior housing. But for every dollar of housing incentive fund that was invested in Dakota 2, it produced essentially a $35 long-term asset. So when you're looking at return on investment, a dollar to create $35 in assets, that's huge. Washington Court is a rehab, and for every dollar that was invested into that development and that rehab, it produced $9 of long-term assets. So very nimble, very powerful, and gets the deals, gets developments done, and a positive return. So it definitely helps tell the story, but I think the legislators need to hear more of that.
So on stay on the financing thread, and one of the things we heard earlier today from a presenter in the first panel was the idea that one of the ways to start addressing housing supply challenges might be helping more builders get into the game. And that conversation was more focused around the regulatory parts that limit what kinds of housing can be built. But from the conversations in this panel, it seems like for a new person entering an industry, having to navigate 15 different funding sources would also be a whole other can of worms when it comes to understanding how to start a new venture. So if there were firms that were looking to get into the industry, where could they even turn to start gaining the awareness of what resources are out there and how to navigate all of that? And is that a role any of you have played at any point?
I mean, I go out and talk to tribes, and they become developers. They weren't developers before. They're governments. They provide housing, but I try and put on that developer role hat, and so, I mean, I think that's a little bit different than if somebody else was going to go out there and start something up. It is complex. I did like that. What he was saying about it, though. I was thinking maybe I would become a developer. He had me convinced. The small, 10 things and the town. I liked it.
Dan, what resources were helpful for you when you were a young, fresh, affordable housing executive?
If you're going to enter into the world of being an affordable housing developer, it's a certain personality and type. It's problem solving, but it's very risky. Real estate development is risk-based. You always have to be ready to adapt and change. And in today's environment, I think it was probably easier when I started than it is today because of the balance sheet that you need and the costs, and how do you have to stand behind every development that you do. If I'm working on a $15 million development, that might be producing 30, 50, 60 units depending on the market, but you're going to be taking out a $9 million construction loan, and so the balance sheet is there. So starting out today, it's very challenging, very tough, and I would just recommend partner with somebody that's currently doing that, see if it's really for you, and learn and grow from that. But that's what I would recommend is partner with somebody that's doing that and work together and work on a few developments and go from there.
And just from, again, my Watford City information is kind of old, but it's still pretty much ringing true that it's just a tale of two cities. It's like the for-profit builders, they have their own financing, and it might be out-of-state equity, it might be out-of-state banks, it might be the banks that were here locally were saying we'll do 50%. So then that wasn't bringing construction, but they'd learned from the 80s oil boom, and so that's what they were going to do. So they're bringing in banks from outside, trying to do 80%, coming up with their own 20% equity. And then most of what we heard from local government was them just grinding on us about building permits and trying to get variances and all that kind of thing. But then for the middle housing and for anything that has more of a public access or an affordable side of it, frankly, and she's not here today, but I met Jessica Thomason in LSS Housing. Otherwise, I don't know what would have happened there. And I mean, it was something where the Dans of the world, the Brent Ekstroms, Lewis and Clark, I mean, you have the folks that are doing this, then they become that asset for the community and basically that developer. And to your point, so the developers, I guess, would have been our housing authorities, had to be the operator, the owner, get the builders, put it all together, and it was very much above their pay grade and above their experience. So you needed the vendors and those with experience that were doing it. But the for-profit, non-subsidized side was just very much, it was very wild and very much with their own financing. And then, like I say, we were just there holding them back on timelines and quality, et cetera.
So Janelle, we've got a question here from the audience about how retiring folks who are looking to downsize might actually be competing with first-time home buyers for the same stock. And Brent, you shared an anecdote too about how some of the housing that was intended for owner occupancy was instead being used for the workforce that was responding to the cycles in energy prices. Is that competition a bad thing? Are there other groups that might feel like there's some tension there? And if it's, even if it's not necessarily a bad thing that there's a competition, does the perception that there's this competition ever get in the way of productive housing conversations?
I think not only competition, but I think creating unrealistic expectations. So for our design competition, we were working with a city and they were fearful that what happens first. So if you create this conversation about this is the type of housing we're looking for, would that automatically then fast track projects that have to be funded and have to be built? You know, so I think not only competition, I think we've got, you know, folks that want to stay in their homes. So there's also that tension with, you know, well, I'm a single family, I want to move into your home, but they don't want to, you know, leave their home. So it's like, how do you create that balance between allowing the folks that want to stay in their home, having funding available to do the remodel, the rehab, to allow them to age in place there, but also if they do choose to leave, like the couple in Grand Forks, they were competing with other people to find a place that would fit their needs. They wanted something with no stairs and, you know, to have it accessible to them. So I think there's always going to be that inherent tension. And I think our role is to really foster those conversations between planners that are trying to, you know, make their zoning fit with what's going on. We get people that come to our office and say, well, how can I go talk to a city commissioner because I don't see what I want in my community? How can developers then, you know, so our role, I think, is creating that incubus to have that conversation to ease that tension necessarily, but I don't think we can build our way out of this. I think, you know, looking at other ways, other options to create space, that those options will come online either with funding. I know during the legislative session, there was a lot of different bills that had fiscal notes tied to them. One was there was $1 million for Health and Human Services to allow people to remodel and rehab homes. And people were like, well, why would we do that? Why wouldn't we just move them out of that house so that young family can have it? So it's, again, there's always that inherent tension, but you have to have options and choices. And I think what we're seeing and feeling right now is there aren't a lot of choices and options. So people feel pigeonholed, and that's where that tension, I think, come from.
I'll give you an answer that I don't know if this is the place for it, but I want to get this point out. So what I'm doing now when communities ask me these questions is listening, and if there's a place where industry's coming in and rolling in, it's for a 2 or 3 year period, and what do we do to put 1,000 employees in? And I just caution them and say, okay, learn from us, don't do man camps. Force them to do something that's permanent. And it was a hard decision, but we had to clear out man camps. And when Kurt Moen took over as our city planner, he cleared a 1 mile. The whole ETA was 1 mile at the time. He said, we're going to clear out all the white campers out of this. Well, 1 mile out, the white campers still accumulated. The county didn't have zoning at the time. But within that circle, then you wait a few years for the permanent developments. And they can come. And even if it's, so Minot, for instance, is going to have an influx to redo all those missile silos. And so the question, what should we do there? And I said, just don't do it with, and here's Mark, I'm just telling Brecca, don't do it with man camps. Just make sure that you figure out where around within town, if there's infill is the best. But if you have areas on the outside of town that have infrastructure to them, or you could get it to them, just whoever is lining up the housing for them, organize it so that it's something you want when they're gone. And I in Williston, if I go to Williston for business, my in-laws are there, but usually I end up staying in a hotel anyway, not to bug them. And the hotels by the former airport in Williston are full every day with oil field workers. Still full 10 years later. But I tell you, they're nice. They're going to be there. You can't take them away. You can't move those things away. Like the oil boom of the 80s was mobile homes. My dad said they hitched up and they left. And there's just a cloud of dust, nothing left. So the permanent apartments, hotels, those will be there when they're gone. So if you can have the fortitude to hold out, you might get 10% of the units built versus a man camp. But I can tell you there's also needs for mobile home parks. The first thing that came into Watford, if you drive through Watford City, the west edge, is a mobile home park. It actually looks pretty good. It's been there for 12 years now. And Greg's Welding came in from Wyoming and said, you really need a mobile home park here. You don't even have one. And you do. You need all sorts of housing. So if you need to have a high-end mobile home park and put standards to it, whatever, that could be a piece of it. But also, then do your normal zoning. Is there multifamily? Is there hotels? What can you do to build out that permanent stock? It's not a bad thing. It doesn't have to be a bad thing if you think you need units after that influx comes. So I try to encourage that way, that it's not all bad, but it's challenging.
Well, that's a great segue into another question in the pigeonhole, which is, are there barriers that you've seen for using modular or manufactured housing for affordable development? So the question was for Lorna and Dan, but anybody who's seen this play out, whether it was in the design competition or maybe other venues for ARP, or maybe it was when that manufacturing park was going in. Were there any hurdles to overcome, whether it was perceptions about the product type or actual regulatory barriers or financing or any kind of barrier?
Well, on the reservations, they get to control their zoning, their building styles, and all that. But there are good manufactured homes, and there are not so good manufactured homes, right? So you gotta make sure that quality is still there, and that it's going to last for a long time. You don't want something that is not going to hold up if there's a strong wind or something like that. As far as the funding requirements, we haven't really had any issues with any of the funders, as long as it's got the quality. If we're just picking, we did have one project where the manufactured home place, we thought we were buying something that the state had certain requirements, and they were supposed to meet those codes. And sometimes on reservations, people think they can just get away with stuff, and they were supposed to come deliver those units, and we said, well, we need you to crane them over this thing. And they're like, we can't crane them. Well, why not? Because they'll fall apart if we crane them over. And so we had to, of course, the tribe didn't want those units. They had already paid for them, but they didn't want the units. The funders, of course, said we can't have those units. So it ended up being a legal dispute, and we had to go and find somebody else with a better reputation and better units. And we're getting those modular units in now, but it really, the timeline stretched way too long, and we're still dealing with that.
Promise I'll be quick. So, and by the way, Jeanette, we had people living in chicken coops and grain bins out 15 years ago too. But then the modulars started rolling in, and they were little tiny modulars that were parked on Scoria parking lots, and at least some of those were built like this really high quality ice houses, right? But then the word of caution I'll say is don't let it turn into where you are putting modular homes on foundations on the 1 acre lots with drain fields out in the rural areas, because that's all that's allowable under code. That's some of the developments you can look at around the area in McKenzie County that don't look so good today. And it's amazing in 10 years time that it could slide like that, but that was a short-term solution that is just not good. You're again, to be patient, wait till the sewer pipe gets there, make sure that so the lots are decent size. People will actually buy a house on a small lot if there's plumbing to the lot, and if there's the foundations are built right, and we changed codes so that you could have pre-builts moved in, right? But then make sure that the quality is there on the foundation and the plumbing is there. Those developments look 100 times better. So don't do the 1 acre lots for those.
So there's a question here about land acquisition as a first hurdle, and people wonder if you can create resources and programs for acquiring land first, and second, are there ever concerns that if there were programs to do that, does that end up driving up land prices for everybody else?
It does. And so now it's to the point of what land do the cities have after all of this happened. And the spike in land, it was incredible to go from giving away lots to charging $1,500 for lots because we had lots for 20 years that had specials that the city had to eat, to, these lots are worth $250,000 a piece, to then all of a sudden the city gets them back. I mean, it is always, it's like the wrong end of the spectrum of the market every time when these things are happening. So yeah, the answer is yes, I guess, a short answer.
I would just kind of add to that as far as when I talk about real estate development and it's risky, it's cyclical, land costs go up and down, but now more recently and or for the last 10 years or so, they just continue to go up. It's very challenging, and I haven't seen a lot of programs out there that help buy down the cost of land. And then even if there are some, you still have to work on the infrastructure, the specials, etc. And so it is a big barrier. And so barrier to entry, developers, you have to have something available to basically work on acquiring a site so that you can then design the site. And so that just kind of goes back to resources and partnering with others to kind of help you through that.
Thanks. One of the themes we've heard kind of throughout the day is how a lot of stories about successful efforts to produce new housing, they don't just require a lot of funding sources, but there are often a lot of people at the table, whether it's the people providing funding or financing or the developers or other people who play an important role on the public side. Are there examples you can think of where a community has continued that spirit of collaboration beyond the project level? And if so, what are the key resources for making that happen, so if that makes sense? So we've heard about people coming together to build housing. Is there a way to keep that energy going at a community level beyond the project?
Well, we work with a lot of different groups. So when I mentioned we did the supportive housing stuff, I'm a finance person. I do the finance. We bring in the experts on the supportive housing side. They work with the services, with the community to make sure those services are going to be there, maybe on rental assistance, those types of things. And then, of course, working with we work with a group that helps with not just market studies, but just market data so that we can all understand what it is we're trying to accomplish with economic development. I think on the tribal side, there's different groups out there like us that are small consulting groups that kind of are wanting to see to all work in the same direction, economic development to housing, housing to economic development, and making sure that they've got access to the programs that they need. So I'd say yes on our side.
I don't really have a specific, I'll just say big picture wise is producing affordable housing and moving that forward past the CO, certificate of occupancy requires a lot of stakeholders and relationships. It's very important. And so basically no one entity is doing it on their own. And no matter what type of housing you're developing, whether it's single family, middle income, basically supportive service, permanent supportive housing. You need a group of stakeholders and partners and strong relationships to move something forward.
And in our work, I think of one community, they saw a need. They saw that there was a gap in information between residents and between city government. And so they felt like they could come to the table to say, we have something to offer. So they created this group that would, have an interaction with the city to really weigh in on certain things. Because the city's also looking for feedback too, but you often get the loud one or two people that show up at meetings, right? You don't get and so it's how do you create space? And I think we've found people are afraid of change. If they haven't seen it or they don't know it and they can't familiarize themselves with it, it's oh, I don't want that there. So having community members that are invested in saying this is important and this is what we need and want, and then visually showing them that this is possible, that this could be designed here and this is what people need and want. But so often people, there's and I try to really engage our members and our volunteers to say, you do have a voice. You do have an opportunity to weigh in. And I know local officials are saying, we don't get people to show up at meetings, so we don't know what you want. So, our role has really been trying to connect those two and having people have a vehicle to talk through what their issues are and vice versa, getting that feedback. Otherwise, I think we're going to continually have this rub of, well, I don't see what I need and I'm not getting the feedback I need, so we're going to continue to butt heads on this. So I think there's space for that. It's not easy conversations, and I don't think you're going to solve it overnight, but just not willing to have the conversation doesn't fix it either.
Thanks. So we've come to near the end of our panel, so I'll, like Libby, offer you all a magic wand to change one thing about producing housing in North Dakota. So if you had that magic wand, what would it be? And no wishing for more wishes.
Free concrete 3D printers for communities that can put in a match. I guess so, not free. Some program where you could deploy them. It seriously became a problem of who would buy it, and it's like $1 million. So it's not something that is impossible. But developers aren't really interested in doing that. But it'd be really fun to see if that's some kind of solution here. That's a crazy one, but some incentive for that.
I guess just making really rural areas affordable to build in, as well as having the investment community want to invest in those communities when you're in a very rural area.
So I'm going to go a roundabout way and maybe set the table or provide some context to my answer, which is essentially when you look at housing and housing in general, the lack of affordable housing is an economic barrier, and North Dakota is competing for a lot of things, workforce, etc. And when you look at specific North Dakota communities, they are undersupplied in housing. And I would say housing, when I talked about housing is interrelated to education, health, etc., I would also say that basically housing is critical infrastructure to communities and North Dakota communities. And you got to take a look at that and look at it from that big picture perspective. And when Libby was kind of talking about, hey, the scale of housing challenges in North Dakota is still manageable, it's a matter of, hey, take that information and look at, from a long-term vision, the 2027 legislative session is coming up, et cetera, and how do you really try to move the needle? So if I had a magic wand, I would say fund the Housing Incentive Fund at scale.
That's hard to follow. I think it's choices. I think people want and need choices. And I think, a big part of my job is working in public policy and working with, state and local and federal legislators. And I think far too often there's always a pointing of fingers. Well, it's not my issue, it's your issue. So it's like, how can we create and foster those public-private partnerships to say, this is possible? In my previous life, I remember working with a legislator, and at that point in time, and this was during the oil boom, we had 8 communities that needed new domestic violence shelters, and they couldn't fund them on their own, and the feds couldn't fund them on their own. And so it was sitting down and having those really hard conversations that it was private public partnerships that was going to make it possible. Was it a perfect solution? No. And I think that's what we supported at AARP, is that it can't be one person or one local entity or the federal government that's going to fix this. It's got to be the partnerships that get us through this. And so, then from there, it'll create some choices for people. I think far too often you don't see the choice and you feel like you just, it is what it is, and there's nothing possible. So I think having that choice would be my magic wish.
Great. Well, thank you all, and please join me in giving our panelists a hand here. And as they make their way back to their seats, we'll hear from Aline Churumoff again to give us some closing thoughts here.
So I get to summarize today's discussion, which is always a little bit daunting, but also somewhat fun. So you'll have to forgive any errors or omissions because I've written this in real time. So if you saw me typing, I was not multitasking, I was listening. We kicked off this morning with a panel about lessons from other states. Emily from Mercatus started by showing us where state policymakers are experimenting with different rules to open up more housing opportunities. Nate Dorr from Greater Minnesota Housing Fund covered rural housing development challenges, small city staff, for example. We hear that a lot, especially in rural areas. Infrastructure is expensive. I loved the fact that we talked a lot about infrastructure today. That was kind of like my love language. Shortage of developers and construction firms who can afford market rate, and folks who can actually afford market rate. John from Nebraska focused on workforce and modular housing, and also reframing housing as economic development, which I think was a really another theme that kind of came up throughout the day. Norm talked about normalizing incremental development and the prevailing pattern of development. This is the quote from his first slide that I wanted to write down the actual words for, is making North America cities and towns weak and fragile, and deep levels of dependencies on higher levels of government across the country, ultimately causing some weaknesses. I liked the question that he asked, are you housing ready? And especially for cities across the country and across the 9th District, really looking at really specific things of like allowing conversions by right, permitting cottages. I actually always call them ADUs, but cottage does sound kind of lovely. Do you have a cottage in your yard? Legalizing smaller lot sizes, things like that. Also great examples from across the country, but the key themes in that initial panel were about incremental change. You don't need to do everything at once. Communication is absolutely critical with lots of different parties, and we actually heard that in the second panel just now. There are lots of different ways to approach a problem, but details and predictability and process matter, especially when it comes to rules that folks might think are enabling, but elements of those rules might actually make it harder to build. Overbuilt underlying infrastructure, again, that was something that really kind of stuck out to me, especially is something that I think from a city standpoint is really difficult to say no to when folks say this is something that we want to do, we should have the right and the ability to do, but ultimately trying to balance that, the cost of that additional infrastructure, not only the implementation of it, but the long-term maintenance of it is something that is borne by not only this generation, but future generations. And that was another theme that kind of popped up a number of times, is the decisions that we make today carry forward for another 50 to 100 years, just in the same way that we're living with the decisions that were made 50, 80 years ago. So it's also not just the kinds of housing, but also the how housing is produced. And that innovation in housing production can actually also help, especially in rural areas. So that was the first panel. Then we did a lunchtime panel, Libby and Ben, and hopefully I missed actually part of it, but I've seen this presentation before, so I'm pretty sure they shared more about the Fed and community development, but also summarized some of the challenges in homeownership, rental, and the shifting nature of affordability, especially for specific professions in the state of North Dakota. They also kind of talked a little bit about the regional specific trends that are important to understand as you're grappling with specific geographic supply and shortage circumstances. Affordability is falling in North Dakota. I don't need to tell you guys that. I think you already know that. In many parts of the state, and that growth might be falling behind in some markets. But Libby did leave us with a hopeful note that the scale of the issue is still a manageable one. It's one that you see the folks in the room and folks who are hopefully online paying attention to this issue and aware of it, I think is really important. This afternoon, we got to focus a little bit more locally on North Dakota perspectives, and the panelists highlighted examples of innovation and how each are working to support the creation of housing that is so critical to creating the communities and creating and supporting thriving communities. Brent highlighted that everyday people understand issues in housing, and that housing and community drive personal decisions on where people live. So, it might have been the right housing for his mom, but not the right community, and ultimately needed to kind of pull back from that decision. Lorda spoke about that as well, as that personal circumstances can really impact not only an individual, but an entire family, and that her company, working with the tribes, are trying to address some of those a more comprehensive view of some of those services. So solutions for these challenges, I loved this theme that kind of came up a number of times throughout the day, require broad understanding from folks, not only from developers, but with local officials, with banks, and community. So each of these groups is actually ultimately very critical to the success of a project, and that if you're missing or you have gaps in support from any one of those groups, it's really difficult to make progress. Another thing that came up from AARP is that people need time and space to come together to understand each other and envision what the future could be. In tribal communities, they talked a little bit more about how to prioritize and balance needs that are beyond the mere provisioning of housing. Another theme that came up, and this is a little bit along the incremental piece, is don't let perfect be the enemy of the good. Balancing what we'd like to do versus what we can do does allow for incremental improvements. So in closing, the challenges facing North Dakota are still solvable. I think that's really a kind of a positive thing, and that all of you coming together to innovate and think about what's important to you and your communities, I think is a very positive thing as well. So I want to thank all of our speakers for coming today, from flying from all across the country, but also from across the state, for sharing their expertise, for all of you for taking the time to be with us today. The level of expertise in the room is really fantastic. I also want to thank our Fed team, including folks still back in Minneapolis who have been providing online support throughout the day, for pulling together today's panel. So can we just take a round of applause for everyone? I mentioned when we started the day that we have a survey that we would love for you to fill out. And for those of you who are online, thank you again for joining us. For those of you who are in the room, we have a reception that we hope you'll join us for. Thank you very much.